On the S&P and the Nasdaq of 0.4%. From New York City this morning, good morning to you all. Bramo is away for a couple of days. That means we get lucky. Katie Lyons jumps into the sea. She's using your vacation, Tom. That's fine, so long as it's not mine. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Shares of Twitter soaring after billionaire Elon Musk announced he's taken a 9.2% passive stake in the company. That comes a week after he asked his more than 80 million followers on Twitter whether the company adheres to the principles of free speech. Meanwhile, Musk has asked a federal judge to throw out his agreement with the SEC, which limits his posts on Twitter. There's growing outrage over reports of Russian war crimes in Ukraine. Broadcasters have shown images of people they said were unarmed civilians killed execution-style. Leaders from around the world have condemned Moscow and are considering whether to impose more sanctions. The Kremlin says many of those images are fakes. Ukrainian President Volodymyr Zelensky made a surprise-taped appearance at last night's Grammy Awards. Zelensky implored people to speak out about the war on social media and TV. He told the music industry, quote, "Our musicians wear body armor instead of tuxedos. They sing to the wounded." JP Morgan CEO Jamie Dimon is calling for more sanctions on Russia, and he warns that the Federal Reserve may ultimately raise interest rates more than the market expects. Dimon covered a number of issues in his annual letter to shareholders. He called for restructuring of trade and supply chains, and he said the world needs reliable and affordable energy. And in Hungary, Prime Minister Viktor Orban scored an overwhelming election victory to clinch his fourth consecutive term. His party maintained its two-thirds majority in parliament. Orban overcame criticism that he is backsliding on democracy and is too close to Vladimir Putin. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
The war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
I think we have to be very clear. I think there's a lot of evidence that Putin is simply taking his troops out of the northern part of the country to redeploy them to the eastern part of the country, to relaunch a battle there. So I think there have been victories for the Ukrainians so far, but this war, sadly, is far from over.
Ron Klain there, the White House Chief of Staff on ABC over the weekend from New York. Good morning. Futures higher by 0.2% on the S&P, on the Nasdaq 100 positive by 0.4%. Yields up just a little bit on a 10-year by a single basis point, 239.51 on 10s right now. And crude advancing now, back with a 100 handle on WTI, up by 0.75%. And one name to watch in the pre-market at the moment, it is Twitter, up more than 26%, as Elon Musk, Tom, takes a 9.2% stake in the company.
Yeah, we will see. I mean, it's just that simple. It's certainly a shock there. It's been a huge underperformer. Not so much the stock price. I don't want to comment on that. But certainly relative to what we've seen with tech and all, to see Twitter moving like that. Because of the importance of this morning, the uncertainty of Ukraine and Europe. Let's get right to it. Christian Muller-Glissman with us, Managing Director for Portfolio Strategy at Goldman Sachs. Christian, I want to talk about your study and your shop's study of how equities do, not given inversion in the yield space, but the depth of inversion. If we take the U.S. 2s, 10s, or any of the other number of pairs and spreads you look at, what does the depth of inversion mean for the stock market?
Yeah, no, I mean, it's a really interesting discussion. In the last few years, every time the yield curve inverted, it didn't invert that much, and you kind of got into trouble later. And already there, you had a bit of an issue because the time between yield curve inversion and the actual recession happening since the 80s has actually been around 20 months on average. So you inverted, you didn't invert that much, and the signal was actually a bit early, you could say. And we're quite worried that this time around the signal might be even more early, because if you have a very high inflation regime, what tends to happen is, of course, that the break-even inflation curve will be very, very high in terms of the inflation pricing at the front end and lower in the back end. So the break-even inflation curve is quite inverted. So it's easier for the nominal rates curve to invert. So it might have to invert more deeply to give a signal.
And for those of you on radio, Christian's hands are moving around while he talks like this, like he's landing an airplane at Heathrow. Christian, if that is the case, and we see these dynamics, how is someone to gauge the amount of equity to own? Like 60-40, it's gone. Efficient frontier, it's gone. How do you find percentages?
Listen, right now is a really tough one because you have this big kind of dissonance between strategic allocation, which is telling you you're going to have more inflation, and that means you need to own more real assets, and at the margin that also means more equity. So you have that on the one hand, and then you have recession risk, as you were saying. And they kind of send conflicting signals, because while we would say that the yield curve inversion signal isn't necessarily as bearish as it sounds, you still have to be quite careful. The macro uncertainty is very high right now for the rest of the year, and our economists have put out an official kind of probability of a recession of 20 to 35%, which is above average. So to answer your question, I think at the margin you want to be a bit above your allocation, which you had in the last cycle to equities, but tactically, it might not be the best entry point right now.
And what about commodities? Is there an entry point at this point, Christian, given the run-up we have seen and the come down we have seen in recent weeks in commodities? Would you be adding to those positions here?
Yeah, I mean, generally, I like the idea of real assets, and the setback we've seen, I think our commodities research team, they've incorporated some of the changes with regards to strategic oil reserve, with regards to kind of supply and demand changes, also the slowdown in growth. I think they still come out with some very good upside for oil over the next year or two. But I think I definitely feel there's much more value in diversifying across the real assets. And that's kind of what our research has shown. Instead of just saying, I'm just buying a bit of oil, or I'm buying a bit of gold, or a bit of infrastructure, what we found actually is that you should add to all of them at the same time, because they have different cyclicality, different micro drivers, and they diversify each other quite well. So what does that mean right now? I actually like gold. I think gold can be quite an interesting asset to help you with recession risk later in the year, with some of the geopolitical risks we're facing, debasement risk. But I think there's also a case for oil in the commodity space, so kind of diversified exposure.
And finally, just to bring it back to equities, since you said you wanted a little bit more in allocation than maybe in prior cycles, earnings risk when it comes to some of these inflationary pressures, higher wages, all of that in theory puts pressure on the bottom line. Do you expect that companies are going to be able to retain their margin, or are we starting to reach the limits of pricing power?
Listen, you're hitting on the most important point for the Q2 earnings season. I think, as I said, equities can only be an inflation hedge or even beat inflation if they are able to deliver real cash flow growth. So kind of roll their earnings after inflation. And I think in the last two quarters, the earnings season has shown pretty resilient margins. But we're entering now the first kind of season where we're quite worried, where I think these commodity inputs coupled with supply disruptions are probably going to hit margins. So finding the right places with pricing power will be much more important than it has been the last kind of 2 quarters. And I think it will really be the kind of jury will be out for kind of equities to be an inflation hedge or not in the next quarter. So I think it will be a difficult one. As I said, we feel that equities have rallied maybe a bit too much on positioning recently, and there could be a bit more of a range. But we think some companies should be able to deliver pricing power and real cash flow growth.
Christian, thank you. As always, Christian Muller-Glissman there of Goldman Sachs. David Costin at Goldman going into the weekend put out some research on yield curve inversion, Tom. This is what he said. The S&P has typically posted positive returns in the 24 months following yield curve inversion, but he has one example in mind, the 70s experience. When the S&P, quote, entered into a bear market, it offers an example of the downside risk to equities amid the current high inflation environment. TK, you can pick your moment, pick your period, based on what you think, I guess, right now. But those investigations, those research pieces, keep popping up.
I just love what Bob Seger did back then. John, it's not the same. Bob Seger, John, Detroit, goods crash and all that, like a rock. John, it's not the same.
Do you want to talk about the differences today?
I have immense trouble with compare and contrast to the 70s.
I thought you were about to break out in song there, Tom.
I did. That was as close as you could get on a Monday.
Just that little line.
There's the tang. I don't know. Where's the tang? I need tang.
I think you've had enough tang. Futures up 0.2% on the S&P. On the Nasdaq 100 up 0.4%. Yields higher by a single basis point. And Twitter.
Hollywood Nights.
Absolutely flying. Hollywood Nights. What else you got? You're going to do this line by line for the next 3 hours.
What's the Grammys?
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Live from New York City this morning. Good morning to you all. Here's the shape of the equity market on the S&P and on the Nasdaq too. On the S&P up 0.2%. On the Nasdaq 100 up 0.4%. One name to watch is Twitter. We'll get to that with Romain in just a moment. In the bond market, we're taking our signal from the yield curve. Curve inversion. 2s, 10s got to about 9 basis points negative earlier on this morning. Overnight in the open as well. Overnight into this morning, right now, we're negative just 4 basis points. Things starting to change just a little bit. The curve a bit steeper on the session. But the worries around that getting really interesting. Goldman out with another piece saying maybe the early 1970s experience is an example of when the S&P entered a bear market with curve inversion because of fears about inflation. Is that the right parallel? Tom King can take his pick from history going back a long time. In the bond market, 2s, 10s, 30s, this is the story for me. Morgan Stanley saying the bear market rally, Tom, is over, and they're saying they're more constructive on bonds than stocks because they think growth concerns from here start to take over. Your 10-year, 238.78.
Well, it's going to be interesting to see the dynamics. Or pick your yield. I mean, Lisa's got like 6 favorite yield curves. I don't know. I just look at the 2s-10 spread, and John, I just think the idea of precluding that we can't go lower, more inversion, is just wrong. There's all sorts of ample processes or ways you can get to a greater inversion.
Abramo's favorite part of the curve, Tom, is the bit that looks worse, as always, as you might expect. Bramo's away for a few days, and she'll come back, and I'm sure she's got a favorite part of the curve she can scream from the hills about and tell you why it's really bad. Futures up 2/10. That was a cross-asset price action. Let's get to Romain for some single names. Good morning to Romain.
Hey, good morning, John. Looking at the top of the leaderboard as far as the individual movers, and it's all about Elon Musk today. I'll take a look at Tesla shares, of course, his primary property, up fractionally here in the pre-market. This on the back of delivery, 310,000 plus vehicles in the first quarter. That's an impressive number to be sure, but more importantly, it actually shows there's been a lot of momentum with these factory openings in the U.S. and around the world. Combine that, of course, with some of the streamlining of the production process and some of the loftier expectations for this company to hit 2 million deliveries annually certainly seems within reach. Now, of course, all the talk about Tesla being overshadowed here about what Elon Musk was also doing in March, and apparently that was buying up shares of Twitter. More than 70 million shares were amassed here as of March 14th. That's according to a regulatory filing that crossed the wire today. Twitter shares up 25% here in the pre-market. It's not quite clear what Elon Musk plans to do with this stake, now at more than 9% of the shares outstanding, making him the largest shareholder in the company. But we do know he has been a pretty vocal critic of a lot of, I guess, the policies that the Twitter platform has taken, either against him or some of his other interests here. Some of the other social media companies like Snap also moving higher here in the pre-market. Flip it up and let's take a look at some of the other movers out there. That includes some of the Chinese ADRs, which rallied on Friday on the back of that Bloomberg News report that Chinese authorities would actually meet some of the U.S. regulatory demands for more transparency with those financial audits. A filing by Chinese regulators on Saturday appeared to confirm that. Alibaba up about 4%, NIO up about 5%, Didi up more than 10% on the day, and Starbucks in the return. Howard Schultz, well, those shares down 2.7% right now in the pre-market after Schultz basically said he's going to suspend share buybacks for the moment and put some of that money more into stores and staff. Tom.
Romaine, thanks so much. Greatly appreciate it. To close tonight to get the Monday started here on an eventful week. Right now, and this is important, the heritage of Greg Anderson at BMO Capital Markets is to write very carefully considered notes back to his days with Fleet Bank, with Podereski and I can't remember exactly right now, but it was a crack team at Fleet years ago. Anderson holds court with Stephen Gallo at BMO Capital Markets, and they have written an exceptionally nuanced FX note to start the week. Stephen, I was amazed at the carefulness of your research note. And the summary of it is to pay attention for an earlier Lagarde. How will she act earlier?
Well, I think one of the risks, Tom, facing the ECB is a destabilizing move lower in the euro if there is an extreme increase in geopolitical tension in the war in Ukraine, or if we move closer to a severe energy supply shock. I think in that case, currency instability will be one of the things that could force the ECB to respond. In other words, a sharp fall in the euro, and then a quicker normalization, if not tightening process by the ECB. But apart from that, and I mean, you can see this in euro-dollar positioning. One of the things that has prevented significant downside in euro-dollar below 110 is that FX investors don't want to be caught short if there's a ceasefire. So assuming we don't have those risks develop or materialize, the ones concerning escalation of the war or severe energy supply shock, then I think the ECB can probably be a bit more relaxed.
Stevie, can you run me through how the Fed's tightening cycle would influence the ECB's, especially with the ECB's going to start much, much later and in smaller increments as well?
Well, I think that for the most part, as far as euro-dollar is concerned, I don't think, we don't think certainly that it really is a play on the Fed or the ECB. It is largely a geopolitical trade. The underlying fundamentals for the euro are quite weak. The trade fundamental has deteriorated. If it looks like we are going to have a prolonged war, in other words, we're moving further away from a ceasefire, or if it looks like we're moving closer to a severe energy supply shock, I think euro or FX investors will be more comfortable entering short euro-dollar positions as the Fed tightens, or as the Fed tightens more quickly. That will be probably a second or a third consideration for these euro-dollar shorts, the first one being geopolitics. But it's certainly something that's in the background that would help the short euro-dollar trade.
All right, Stephen, so that's the Fed's relationship with the ECB. What about the BOE versus the ECB? Where does that leave euro sterling?
Well, if you're talking about the Fed and the BOE, the primary one you have to look at is cable. I think this issue of the BOE not having monthly meetings is a bit of a headache for the MPC right now, because there is clearly a risk of the bank falling behind the Fed. So, for example, if the Fed goes an additional 125 basis points by the end of July, 50, 50, 25, and the BOE moves in increments of 25 basis points at the next few meetings, it will be something like 50 basis points or so below the Fed by the end of July, which has probably got to mean that one of these next meetings for the BOE, there is a considerable risk of a 50 basis point move. And I think this situation for the BOE also ties into the dynamic for the ECB. I mean, these central banks don't want to be caught too far behind the Fed. If the Fed is tighten faster, and it's not going to pause anytime soon, that potentially puts these currencies under pressure versus the dollar. If we have other factors align, which prompts FX investors to get more long of the dollar. So they certainly don't want to be too far behind the Fed.
Well, Stephen, the Fed tightening, the BOE tightening, the ECB may get there with a rate hike by year end. The BOJ is decidedly not. In fact, actually intervening in the bond market, becoming even more supportive. Dollar yen at 122. We've been basically in that range for the last 2 weeks or so. What is your best guesstimate on the trajectory, given a Bank of Japan and a Kuroda that is really committed to easy policy?
Yeah, that's right. Committed to easy policy. Inflation at the moment is not a significant problem in Japan, and that's certainly the way that the BOJ has behaved. Our 3-month view on dollar yen is 124. So rather than position for a massive breakout of the 125 level in dollar yen, our preference would be to continue to buy the dip. So down toward in the low 120s, positioning for a move to 124. Looking at the pretty tight relationship between dollar yen and the USD 5-year rate, not a bad relationship to be looking at. But you're right. I mean, for the moment, the BOJ is in a position to defend the upper end of its target range for the 10-year JGB yield, and we think that's what it will continue to do. It also looks like Japanese officials have put 125 as a line in the sand for the time being.
Hey, Stephen, always awesome to catch up, buddy. Good to see you. Stephen Galler there of BMO on the ECB, the BOJ and the Fed too. The ECB next week, April 14th, just around the corner, Katie Lyons. That's going to be an interesting meeting, that's for sure, given the recent data and recent developments there as well, for that matter, across the continent.
Well, 7.5% inflation in Europe, really beating across the board when you look at the different countries within the European economy, John. What does Christine Lagarde do in this situation in which you are seeing really dramatic pricing powers and a consumer across Europe that is really feeling the pain of a cost of living squeeze at the same time that potentially is posing a risk to growth? How does a central banker walk that line, and what does fiscal policy have to do with that factor in that equation as well?
I don't know what she'll do, Tom, but I'll tell you what the market thinks she's going to do, and that's hike. And you can see that in just the way the 2-year yield has changed in Germany, from negative 50, 60 basis points and sometimes more, and back to zero at one point last week, Tom. That's pricing in some movement, some action.
And the voice is percolating out there. Axel Weber, this is our Bryce Bashik writing this morning. Central banks too slow to counter inflation, says the former head of the Bundesbank, Axel Weber, now with a small Swiss bank. And, you know, John, I look at the dynamic in Europe, and frankly, it's more interesting than the Fed. It's going to be fascinating.
German yields come in 3 or 4 basis points today at the front end, with negative 10 basis points on a German 2-year. Coming up, 8:15 Eastern time. So an hour, no, Tom, not even that. 35 minutes away. This morning's going so quickly because we're having so much fun.
We're having so much fun.
Time flies.
Dan Tannenbaum, Global Sanctions Head at Oliver Wyman, joining us very, very shortly. Futures up a little more than 0.1%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Leaders from around the world are condemning Moscow over multiple reports that Russian troops have committed war crimes in Ukraine. Russia could face more sanctions over the matter. Broadcasters have shown images of people they say are unarmed civilians killed execution style. The Kremlin says many of those pictures are fakes. In Shanghai, more than 9,000 new cases of coronavirus were reported Sunday. Thousands of medical staff have arrived as the city prepares to test all 25 million residents. Meanwhile, there are reports in China that new substrains of the Omicron variant have emerged. President Biden is calling on Congress to act on gun-related issues after a deadly shooting in Sacramento, California. Police say at least 2 shooters opened fire early Sunday as bars closed for the night. 6 people were killed and 12 others were wounded. Starbucks founder Howard Schultz has marked the start of his latest spell as CEO by suspending a share buyback plan. In a letter to the coffee chain's employees, Schultz said the cash could be better spent on stores and staff. Schultz is taking over on an interim basis while Starbucks searches for a permanent CEO. And in sports, South Carolina defeated Connecticut 64-49 to win the NCAA's Women's Basketball Championship. Destiny Henderson scored 26 points for the winners. It is South Carolina's second national title. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Companies
banks have just gotten much, much better at combating margin pressures. Technology has been just a structural margin winner over time, and it now accounts for a disproportionate share of earnings, much, much bigger impact now than it has in the past.
Laurie Cavacina there of RBC, much less constructive on energy, a little bit more so on technology. An interesting conversation earlier this morning. Good morning to you all. With equity futures on the S&P and the Nasdaq up 0.1% on the S&P, on a Nasdaq up 1/3%. Crude up more than 1%, $100 and about 40 cents. Yields higher by a single basis point, 239.33 on a 10-year. A Jamie Dimon letter to get through over at JP Morgan, his annual letter out earlier this morning. Tom, something for everyone in this, and you've read through the whole thing. I know, 44 pages long. This line on Russia, Tom: we are not worried about our direct exposure to Russia, though we could still lose about $1 billion over time. Jamie Dimon this morning.
I would emphasize that $1 billion over time for JP Morgan isn't all that much money. He made that clear within the letter when you look at the scope and scale of what we see from one James Dimon. It is unthinkable that most other bankers could write this letter. There's all sorts of reasons for that. We're not going to dive into that right now, but we are going to dive into the financial tone as set by Mr. Dimon. Marcus Ashworth is excellent and expert at doing that. He writes for Bloomberg Opinion, but he's encyclopedic on bank and particularly bank culture. 44 pages, about 30 pages in, Marcus, Mr. Dimon reaffirms that he wants to do a global consumer bank. He doesn't mince words about it. Is he affecting European banking, just as one example right now?
Not just yet in Europe, but he's definitely using the UK as the launch pad. We have Chase over here with its credit card offering 1.5% interest rate. Be still my beating heart, but that for us is still about as good as it gets if you have money to put on deposit. So yeah, I think they have big operations. JP Morgan, already close to 20,000 people here in the UK. Big operation down in Bournemouth on the south coast, processing retail banking. So they've got scale, and clearly now they're offering the product. Goldman Sachs came in with the beautifully named Marcus product a couple of years ago, and have made some impact, but I think Chase is going to make more.
Marcus, let's talk about, not that, but let's talk about how much this costs, the spend. The spend was something that dominated earnings season for JP Morgan last time around. Have we had clarification, sufficient clarity on what that spending is going to achieve?
No, not yet. I mean, obviously, they've got a lot of other moving parts, and I'm fascinated what he says about other things like the world economy and indeed Russia. But you know, look, there's a lot of room to grow, I think, into Europe markets, particularly if interest rates do rise in Europe and there starts to be ability to pay interest. I think JP Morgan will be very well positioned for that, and clearly likewise in the UK, which is being dominated again by the big banks in the UK. Challenger banks have slipped to the side as conditions have been tough for them. So I could see a big US bank doing well here.
Well, and obviously JP Morgan serves this kind of dual role where it is a very consumer-facing bank. At the same time, it also is a very large investment bank. On the side of the consumer, Jamie Dimon talked about the excellent shape that households are in, that they're still flush with cash from the pandemic stimulus, though account balances in lower-income households are falling faster, failing to keep up with inflation. How large is a risk of there for JP Morgan and other banks of deterioration in the American consumer?
Well, it's not just the American consumer, but I mean, look, I think housing is something in the States we've got to keep a very close eye on. Look, I appreciate that the cost of a 30-year mortgage now is well above 4%, which is way ahead of what it is in the UK, and let alone Europe, which is not even barely at 1%. So we've got to keep a very close eye on US housing, and I think that will be the canary in the coal mine, really, to see quite how the consumer handles it. There's a lot of savings were built up during the pandemic. JP Morgan's been the biggest beneficiary of that. They've got to do something with that money. Lending to housing would be the logical thing. However, people have got to pay their mortgages, they've got to pay their loans back, and that's something they will be a very clear barometer of. And I think Jamie Dimon was very right to have it sort of both ways and point these risks out.
Marcus, I want to dovetail this in. Doug Cass will be joining me later, and he is heated about the tone within the Dimon letter about the technology spend that John Farrow mentions. Then I want to bring it over to what Michael Mauboussin said over 20 years ago, which is the end of technology and the internet, the Ethernet culture, is that fewer win. Is JP Morgan at risk of being so dominant that nobody else can win?
Well, for sure, and it has been for quite some while. I think look at fintech in certainly the UK and a lot of Europe. I mean, any of the decent ones tend to get snaffled up. Nutmeg being one that they picked up on, and I think Goldman's are doing the same story. So yes, there is very much a risk of that, and I think we should be very alive to that risk. You know, if JP Morgan has the muscle to impress and on internet banking, it has the money to spend if it needs to. I mean, normally there's an open pit, you know, IT spending. You can keep on throwing money at it. JP Morgan has the capacity to do more than most, and I think it will therefore benefit exponentially more than others. We have to watch out for that risk.
Marcus, it would be rude not to ask you about the ECB and what it might mean for these banks in Europe. I mean, to get back to zero on a deposit rate, how transformational would that be, Marcus? How big would that be?
Well, it'll make me a very happy man, John. As you know, I'm a big hater of negative rates. I think the whole time value of money and just being paid you get paid to borrow in Europe at times. It's just madness. And I think that doesn't feed through to the whole loan dynamic that you need to have in an economy. And I think it would be, ironically, the best thing that will ever happen to Europe if they get interest rates back up just to zero. That's all I'm asking for. Stop QE gently. They have a lot of reinvestment on that side anyway. They don't need to keep on adding monthly, I don't think, soon. So, look, it will be absolutely transformational for the European bank market, particularly in places like Germany, which, you know, there is no savings incentive there at all. And, you know, really they need to be able to make some money. Otherwise, their entire banking system, all those small Schuldschein bank dependent stuff, all those savings banks are going to be bankrupt for not too long.
We've turned finance upside down in the last 10 years in Europe. Marcus, thank you, sir. As always, Marcus Ashworth there. On a banks on a Jamie Dimon annual letter as well. This from Austria this morning, responding to the deeply concerning pictures out of Ukraine over the weekend. They say the following: Russian war crimes require consequences. And then, Tom, here's the following line: very reluctant when it comes to gas sanctions. That's Europe this week, unfortunately, Tom. That tension's not going anywhere.
The map says everything. Austria is one of the select 3, 4, 5. Latvia, I think, is in there as well. John, I got one published view. 10% of their energy comes from Norway. 80%, 80, comes from Russia.
And Tom, we started the conversation this morning, you and I, with a basic question. Can Europe respond to this without losing credibility? And if anything is short of energy sanctions, do they lose credibility? And I think ultimately, Tom, that's the conclusion coming into this morning, isn't it, before we've even seen the week play out?
I think the news flow will dictate it, and the uproar, the outrage of people. To be fair to the gentleman from Austria, he mentions the outrage of the weekend. But John, to me, the key headline here is energy starting to look at more original and more traditional energy like coal. That, to me, is sort of fermenting this morning.
Crude just a little bit higher this morning. WTI back with a 100 handle briefly. On the equity market, we're positive 0.2%. On the S&P, we're up. On the Nasdaq, we're higher by 0.4%. Crude, $100 and around about 50 cents. From New York City, heard on radio, seen on TV. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos
pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is the markets readjusting to a much faster pace of Fed normalization.
Growth is absolutely going to slow. That's the point, and financial conditions are going to tighten. That's the point of Fed hikes.
Concern is that did they wait a little bit too long and now they have to move higher, quicker?
They have this very blunt instrument. They can't control where the demand contracts in the economy.
Certainly recession risks are higher, combining everything we're seeing globally.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Kaylee Lyons in for Ms. Abramowitz this morning on radio, on television. And yeah, we're looking at the markets. We're looking here, we're looking there. John, none of it matters. Do we have the courage this morning to look at the images on the cover of the newspapers?
Haunting, Tom. That was the word used by the European Council President. Haunting, deeply concerning, distressing. Take your pick. How does Europe respond to it? That's the question that will dominate this week. And will they fall short? And most people, Tom, conclude already they will.
This is not war from a distance of other centuries, other times, even of World War II, and dare I say Vietnam. There's an immediacy here, John, that not only affects the war outcome, but affects the policy around it. It is a Europe shaken this morning.
There's a moral question too, Tom, and that's dominated the conversation now for weeks. How do they back away from energy? They can talk about reducing their dependence over time, but this has become much, much more urgent than that, Tom. They don't have years. This electorate, I imagine, wants to see them do something immediately. You can see the pressure building right now. If they do that, you know what the price will be. Almost a guaranteed recession if they go through with that. That is the conclusion of most people, including the Deutsche Bank CEO earlier this morning.
Addressed by Mr. Diamond in his letter. John, I want to get to Kaylee in the Washington response here, but let's go to that one headline that Mr. Diamond had. He demands a Marshall Plan for EU energy security. That has a new urgency this morning.
Well, that's the issue, isn't it? How does the United States assist the Europeans? And I've said this repeatedly, the Biden administration has done a very good job of not embarrassing their allies over the last month, allowing them at times to embarrass themselves. And I think this is an occasion, Tom, where the Europeans this week may start to embarrass themselves again, with the Austrians this morning saying that war crimes require consequences, but ultimately saying the following: very reluctant when it comes to gas sanctions. So the Europeans once again embarrassing themselves. And the United States, Tom, has to outline a position, which it has done recently, of how they will assist the Europeans to cut back drastically their dependence on Russian energy.
Katie Lyons, in this 44-page essay, and all full disclosure, folks, I love it. I just think it's beautifully pieced together with a lot of interior data on J.P. Morgan's competitive landscape. Mr. Diamond always touches on America, and he talks there about how we need to address our redress. And what this comes down to is America right now adapting to Europe. And there has to be a new initiative from Mr. Biden starting this morning.
Yeah, as ever, Jamie Dimon taking quite a stance on political issues, also calling for tougher sanctions on Russia, but warning, too, of the potential growth impact that can result from it, saying that it will result in a slower economy. It builds inflationary pressures. That makes it very difficult for a Federal Reserve, which he says he does not envy. And this is the question for policymakers in the U.S. as well as in Europe. What do you do on the monetary side and on the fiscal side with energy front and center? That creates a squeeze on constituents, on consumers, and Europe has to factor that in.
John, we got to get one question out here, one observation before we get to our data check and our good first guest here, and that is the speed of change of yield. It's breathtaking.
It is, Tom. It is, and we have curve inversion, and we're one hike in. And now Citi, Andrew Hollenhorst earlier this morning, TK, what did he say? 50 basis points, 4 straight meetings, 50 basis points,
he
50,
didn't back
50,
away,
50.
did he?
Not at all.
Not at all.
Maybe a little bit of a crack in the armory, Tom, if you look at what's happening with the ISM, but that jobs report was stellar.
Through the data quickly, equities lift, the VIX 20.23, the Dow up 15, fractionally up 15 points. John, what do you have?
Futures up just a little bit, Tom, up 0.2% on the S&P, on the Nasdaq 100 up 0.4%. Yields essentially unchanged, 238 on a 10-year, and crude just over the last hour or so, kicking a little bit higher, up 1.5% TK, $100 and about 80 cents.
The focus of financial media is full faith in credit, the sovereign yield. Matt Brill has the courage to look at credit, investment-grade corporate, even the junk for Invesco, and he joins us this morning. Matt Brill, are yields finally where they compete with dividend and share buyback in the equity markets?
Hey, good morning, Tom. Yeah, it took a while to get here, and it was certainly a very brutal first quarter, just to be honest. Total returns down very, very big, but what we've always said is that investors want higher yields. They just don't like the path to get there. And the path to get there was pretty tough. But we're here. We're certainly at much better elevated levels for entry. If you could close your eyes and just sort of wake up today and look at yields, I think you'd find them attractive if you just didn't have to be on this path to get here. So yeah, all-in yields, particularly for corporate credit, call it 3 to 5 year, look really attractive now versus dividends and other alternatives.
What about relative to where spreads are, Matt? How do you think about that? Because spreads have actually been tighter over the last few weeks. How are you thinking about that, particularly in high yield?
Yeah, so spreads blew out in early March and in late February and got to the point where we said, look, we don't really know what's going to happen with Russia. We don't really know if the Fed's going to push the U.S. into recession, but you're essentially pricing in almost the worst case scenario, maybe not quite the worst case scenario, but a lot of bad was already priced into credit markets. And we have come back significantly. So we've seen this big rally in high yield. We've seen about a 30 basis point rally in corporate credit spreads and IG. But we're still kind of in the middle of the range. So I would say that we went from, I don't want to call it a no-brainer, but it certainly felt like an area that you had to get involved unless you feared the worst was going to happen. And now you're kind of more in the neutral range to slightly cheap. So you're no longer getting what I would call kind of a free option of sorts here, but it still is cheap. You're still 30 basis points wider in US IG credit spreads. You're probably about 50 to 75 wider in high yield versus where you were at the tights. So things have cheapened up. I'd call them near-term cheap, but long-term, kind of more neutral.
Matt, Jamie Dimon said this morning: the stronger the recovery, the higher the rates that follow. I believe this could be significantly higher than the markets expect, and the stronger the quantitative tightening as well. QT for sure. Matt, with that in mind, a lot of people are worried about a replay of late 2018. We remember what happened in 2018. The supply, the primary market, shut down in high yield. Matt, when you look at supply coming into IG, into high yield, how does that stack up at the moment?
Yeah, so Diamond said he didn't envy the Fed. I don't think he envies bond managers right now either. I think it's a very tough world. And when you look at supply, it's two completely different spaces. So high yield is down roughly 75% year over year. A lot of deals are getting done in the loan market. There's tremendous demand for floating rate paper, bank loans, et cetera. And then the high yield market really is price discovery has been very difficult there. So I don't know that a lot of companies are really looking to figure out where they would have to price. Versus the IG market, you just had $230 billion issued in the month of March, which is the second most in history. And to your point earlier, credit spreads were still actually able to tighten, at least in the back half of March. So a lot of supply being issued in the investment grade market. We're really flooding the market and have been able to absorb it. I think it's a good sign that you're actually seeing a lot of issuance. Companies are coming and saying the market's functioning. I need to go now. I'm not sure where the Fed is going to go. If the Fed does go 4 straight 50s, as is being talked, you're going to probably have higher yields. So you might as well issue now, front run this and get it out early. And so that's what a lot of corporations are doing. From our standpoint, as long as the market is functioning, as long as the paper is getting taken down and concessions are minimal to decent, we're happy. We think the market's functioning right now. That's good. If it starts to seize up like it did late 18, that would be bad.
Well, Matt, to that point, as we think about the path forward of Fed policy, potentially an aggressive path forward, when do you think financial conditions will actually start to tighten in a material way, considering they're just as easy now as they were at the end of February before the Fed hiked?
Yeah, so that's the big question for 2022. Obviously, you've got 2 taxes. One is just the commodity tax that's going on, and then 2 is going to be the Fed hike. So the economy is going to have to slow down. You can't have oil prices where they are. You can't have food prices where they are and not have that flow through. You can't have the Fed go to roughly 2% on Fed funds by the middle of this year and have that not be a tax on growth. So we're going to see that happen. The good thing for the economy and the good thing for corporations is that they're in such a good place to start. They have a good balance sheet. The corporations do, at least. They're starting at a good balance sheet so that when it does slow and you start to see the back half of the year, the consumers start to really lighten up on some of the purchases, I think you'll at least be in a decent enough spot that they'll be able to weather the storm. But, the fortunate thing is that they did fix their balance sheet in 2021, or else we'd be talking about a lot worse situation for corporations as well as the U.S. economy.
And Matt, we had Citi on earlier this morning. Andrew Hollenhorst has been kind to us over the last few weeks, outlining his call on the Fed, 4 50 basis point hikes in a row. Do you think we got more chance of Tiger Woods playing this weekend than we have of getting that from the Fed?
I really hope Tiger plays. So, the odds there, I think 4 in a row, 450s is probably not going to happen. I think they're going to go 2, possibly 3, and then they've just got to take a step back and see where this goes. So better odds of seeing Tiger this weekend, better odds of the U.S. getting out of the group against England, this November than the Fed going 4 in a row.
I asked that just because I wanted to talk about the golf, Matt, and I agree with you. Honestly, TK, the golf without Tiger still, after all these years, still is not the same.
Yeah, I actually saw a study of that, I'm going to say 2 years ago. His influence on who watches when is still stunning. Absolutely stunning.
We need him this weekend. Matt Brill, thank you, sir, as always, of Invesco, on credit, and of course on golf this weekend. The Masters kicking off later this week, Tom. Equities up 1/10% on the S&P, on the Nasdaq up 1/3%. Some great notes out there, but once again, Mike Wilson coming out of the weekend over at Morgan Stanley, taking the headlines once more, calling the recent squeeze in equities through the month of March a bear market rally. And he says, Tom, over the weekend, the bear market rally is over.
I go back to earnings, John. I've got Ed Hyman and his team looking at 9% earnings growth, others beneath that, and then others even farther below. The bear market rally, it's over. There it is.
Well, his concluding line, investors face multiple headwinds to growth that will be harder to ignore. Tom, that's the second half that I know you're thinking about a whole lot more.
Yeah, again, staggering to May 4 and then to the future meetings, as Matt Brill just told about. The uncertainty here is just absolutely off the chart.
Futures, up the 10th, with Tom Keene and Katie Lyons. Katie, thank you for being with us. Yeah. I'm Jonathan Ferro. This is Bloomberg.
Welcome.
Just happy families, Tom.
Keeping you up to date with news from around the world. With the first word, I'm Ritika Gupta. Shares of Twitter soaring after billionaire Elon Musk announced he's taken a 9.2% passive stake in the company. That comes a week after he hinted to his more than 80 million followers on Twitter that he might shake up the social media industry. Musk asked them whether they thought a new platform was needed and said he was giving serious thought to starting his own. There are growing reports of outrage over reports of Russian war crimes in Ukraine. Broadcasters have shown images of people they said were unarmed civilians killed execution style. Leaders from around the world have condemned Moscow and are considering whether to impose more sanctions. The Kremlin says many of those images are fakes. JP Morgan CEO Jamie Dimon is calling for more sanctions on Russia, and he warns that the Federal Reserve may ultimately raise interest rates more than the market expects. Dimon covered a number of issues in his annual letter to shareholders. He called for a restructuring of trade and supply chains, and he said the world needs reliable and affordable energy. In Hungary, Prime Minister Viktor Orban scored an overwhelming election victory to clinch his 4th consecutive term. His party maintained his 2/3 majority in parliament. Orban overcame criticism that he is backsliding on democracy and is too close to Vladimir Putin. In Hong Kong, Chief Executive Carrie Lam says she won't run for a second term. That ends a 5-year period that saw the city become more isolated globally due to COVID restrictions and a crackdown on democracy advocates. The next chief executive will be selected by a committee of pro-Beijing loyalists. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
It's absolutely unacceptable that civilians are targeted and killed. It is also extremely important that the International Criminal Court has opened an investigation into potential war crimes in Ukraine, and that all facts are brought on the table, and that those responsible are held accountable.
Jens Stoltenberg, the NATO Secretary General, on CNN over the weekend, following some deeply disturbing pictures coming out of Ukraine. Futures this morning, positive 0.2 on the S&P and the Nasdaq 100, up 0.33%. Yields a little bit higher. The curve steeper, 239.51 on a 10-year right now. 2-year yields come down 3 basis points, 242. The curve still inverted, 2s out to 10s. That spread negative about 3 basis points, but off the lows of this morning. Elsewhere, Tom Crude, just to wrap it up, we reclaim a 101 handle on WTI.
John, thank you so much. Right now, folks, we speak of the unspeakable. With us, Daniel Tannenbaum, Global Head of Sanctions and America's Anti-Financial Crime Leader at Oliver Wyman. And Dan, I want to go to the time I spent in London with John Taylor of Stanford, who was International Treasury Secretary. John Snow was ill at that G7 meeting, and the weight on John Taylor's shoulders of explaining to America you had to grow up and figure out where the money came from. Nothing's changed. And your work suggests that gazillions of dollars of suspect money, maybe including Russia, is in America, in New York, and we don't know where it came from, or we're ignorant.
No, that's right. And I left the Treasury Department in 2007, and we were talking about this then. Private funds in the United States are not required to know their customers.
When's it going to change?
It's been attempted multiple times over the last few years. There's another piece of legislation in front of Congress called the Enablers Act that would expand the coverage for AML requirements to these private funds. But right now...
Who's blocking this? I don't mean to interrupt, but I got Jamie Dimon's 44-page letter, and we got gazillions of dollars. We don't know where it came from.
There's been a mix of interests that have tried to fight this covered financial institution definition over the last few years. Whether this is enough to really put that expansion over the line is unclear. There's been other issues in the past where this really hasn't moved the needle from a legislative standpoint.
At $10,000 a slot, I think it is, to get money in. How does all that money get into America? Briefcases?
It's not coming in through briefcases, but it is coming in through certain offshore financial institutions. And I think the bigger issue is even when it comes from domestic financial institutions, the funds that are holding these assets only have to ask so many questions to satisfy their own risk, but less around what the law is actually obliging others.
John, I sat in a hotel with John Taylor in, I think, 2005 with Gordon Brown's G7 meeting, and the weight on his shoulders, because people didn't want to grow up and actually find out where the money came from, nothing's changed.
Well, we've got to fold in China to this conversation as well, Tom. Dan, talk to us about secondary sanctions and how China fits in here.
Yeah, and look, secondary sanctions were used successfully related to Iran, and secondary sanctions, just to remind the viewers, essentially force foreign countries to choose between doing business with the United States and its allies or the target of sanctions, but not both. Those work to help drive, among other things, Iran to the negotiating table and form the Iran deal. In this instance, secondary sanctions would largely focus on trying to ban other countries from purchasing Russian energy products, among other things. But secondary sanctions here are only as effective as the EU is on board, because the last thing that the U.S. and other allies want is to penalize the West for, really trying to fall out of line with what's been thus far a pretty multilateral global approach.
Dan, pretty much every single bank right now has got a team, an army, excuse the pun, of lawyers and legal experts telling them what they should and should not do right now. Dan, do you think it's inevitable that further down the road someone's made a mistake and that mistake is going to come with a massive monster fine?
I actually don't. So most of the larger fines that we've seen historically have been tied to egregious issues, banks that were intentionally violating the law. I think given the pace of change that we've seen over the last 6-7 weeks, it's very easy for financial institutions and other companies to make mistakes. It's those that are really intentionally doing this. Those are the ones who are going to find themselves on the receiving end of a monetary penalty. Those that are just trying to find their way through an evolution of risk appetite and might have made the wrong call, those may be a little more mild.
Dan, of course, we're waiting to see what the response from the European Union is going to be. They said there will be a response in retaliation against what they are calling war crimes on the part of Russia when it comes to cities like Bucha in Ukraine. Energy, though, seems off the table, at least for a few players, like Austria and Germany, not for others. Lithuania, for example, already taking unilateral action on that front. What kind of holes does a potentially piecemeal strategy of sanctions where each country is acting unilaterally rather than as a group when the European Union, what loopholes will that leave?
Well, I think you're not going to see the EU be able to move forward with any sort of material energy sanctions program until they have more kind of alignment across the members. You're right. Lithuania announced over the weekend that they're going to ban the import of Russian energy. They imported about 26% of their supply of LNG. But then you had Slovakia over the weekend announce that they will cede to Russian demands and pay for energy in rubles. So these sanctions really are somewhat DOA until there's a bit more unilateral or multilateral alignment across the EU bloc.
Dan, just finally, I just want to squeeze this in because I know it's something you really want to talk about. Just a comment, and then we can have a broader conversation in the not too distant future on China and auditing rules and whether we may finally come to an agreement, a big breakthrough on that front.
I mean, that is a big deal. As you guys know, I used to be with a public accounting firm. I worked pretty extensively in China with some of our audit clients. That is a big deal. I mean, some of those information requests, I mean, you would not even breathe that request of we need certain information to come across to the U.S. for a variety of reasons. That is a fairly significant olive branch on the part of China to really understand that they faced a significant delisting risk if they were to continue on their current and historical track.
Dan Tannenbaum of Oliver Wyman, stay close. We all remember doing this as a kid, Tom. Do you remember going into your father's wardrobe, the closet, and taking out his suit at about 5 years old and putting it on just to try it on? And what that looked like, TK? Do you remember that?
Yeah, but it's happening in real time.
Justin Bieber and Balenciaga.
My gray suit on.
That's now a style, Tom, to take your father's suit as a child and put it on. Someone said it was the Shaq sizing or something like that, TK.
He had a gray suit on, double-breasted. You know, I mean, I could fancy
like
up
50
there.
sizes
Radio,
too big
you know,
for him.
Yeah.
At the Grammys.
And a pink beanie.
And a pink, yes, that's right, Katie. Don't miss out the peak.
What's fascinating?
The pink beanie. The accent here is important.
It's called fashion.
It's amazing how some people get it and some people don't.
Do you get it?
Did I get what?
Do you understand the trend?
What, Bieber?
Yeah.
No. I mean, I like that he wore my suit, but, you know, no.
Balenciaga in head office. I've got no inside information on this. They are having a laugh. They are laughing their heads off as people go around wearing this stuff.
Yeah, should have worn Oxford.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Live on TV and radio, this is Bloomberg Surveillance with your price action shaping up as follows this Monday morning. Good morning to you. On the S&P, up 0.2%. On the Nasdaq, up 1/3%. We're light on economic data through much of the week. We've got some factory orders a little bit later this morning, 10 Eastern time, some durable goods orders, a final read for the month of February. So we're looking back a fair bit. Later this week, though, Fed minutes. The ones to watch, apparently, and that's according to Chairman Powell, because he told us in the last news conference to do exactly that. If you want some ideas, some more clarity, some detail on balance sheet reduction, look to the minutes. Tom, the minutes come out on a Wednesday.
It's going to be interesting. Tell me why the minutes come out. I mean, I look at them, some, several, that. Why do the minutes matter?
Because apparently we'll get detail on balance sheet reduction, Tom, according to Chairman Powell. Apparently, that's what he said. So we'll look for the minutes, TK.
We'll see. Do they have minutes at the ECB?
They have accounts of the last meeting.
Okay.
Whatever that means.
I have no idea. They need the Bramo cam. That would
They'll
do
give
it.
you the ECB account of what happened at the meeting. The account.
Yeah. They need the Bramo cam. We'll bring it in.
I'd love the Bramo cam.
Right now, this Tang is good today, by the way.
I can tell you've had plenty of that this morning.
Yeah, I have. Laura Rame joins right now, Chief U.S. Economist at FS Investments, with a really, really interesting research note where, Laura, you say, look, the recession math doesn't work. There's really not a recession out there. And then you've got the back end of the equation, and I'm fascinated by this, trade, exports less imports. Can the trade dynamic push us into some indirect form of recession?
Well, I think what we're seeing in the economy is this giant pivot towards U.S. regionalization, U.S. manufacturing. But at the end of the day, it's just going to take a lot of time. And when we look to the GDP accounting in the first quarter, the trade deficit continues to just gap at record levels. It's going to mean that getting a positive growth number for this quarter is really going to be a challenge. One quarter doesn't make a recession, but it sure is going to make growth feel very stagnant.
But it works in, and I'll go back to your old heritage, it works into currency dynamic as well. Do you need to fold currency dynamic into a recession analysis?
You do, because, when the Fed raises rates, and I think the rates dynamic is really what's driving FX right now. We've seen FX almost be a bystander throughout these giant commodity moves, these big rates moves. But the dollar is strengthening, and as it strengthens, that's another form of policy tightening. So at the end of the day, you're going to be watching the dollar on a trade-weighted basis against our major partners. The yuan has allowed itself to stay pretty strong against the dollar. And I think, but if China starts to really weaken its currency, that's sort of another front on policy tightening for the U.S. economy to handle.
Well, Laura, let's talk about the rates moves that you say are having such a strong hand in FX. The inverted yield curve, the Fed seems to pay it no mind. Should they?
They absolutely should. And there's a reason why at the very earliest stages of a Fed rate hike cycle, people start wondering about the end of it and what the economy looks like at that time. Trying to slow the economy down is really, really tricky. And we've got a lot of momentum. It means the Fed is going to have to be aggressive. I mean, they've clearly stated that. So, to me, it's too early to sound an alarm bell on a recession over the next year. But you look 3 years out, an inverted yield curve is a pretty strong signal that we are facing some kind of significant slowdown. And I think I want to add on to that when you look globally, I've been saying for some time now that I think the U.S. yield curve really reflects global growth dynamics to a larger degree than we've seen any time over the last 40 years, because global yield curves are so flat. So it's a global growth story too, and it's slowing down.
Well, and on the subject of global growth, how insulated or not is the U.S. economy to what we're seeing playing out in Europe?
So far, on the economic side, we're pretty insulated. But when it comes to financial conditions, that's I think, really clear vulnerability at a time when the Fed is starting this quantitative tightening. And we don't have really good examples of prior episodes of quantitative tightening. And the one that we have did not end well. So this is a time, I think, where markets have a lot of uncertainty. The quantitative tightening is going to layer onto that. And especially when we're seeing so much volatility in benchmark yields, that stands to ramp up even more over the summer.
With the data of last week, brief me on the savings rate and what it signals about recession. I don't really buy that a diminished savings rate vaults us into recession. Am I right on that?
Yeah, I'm with you, Tom. That's not my primary indicator. I think, when we look at the savings rate, it's just clear that we've had such tremendous wealth gains across the economy that, that are not captured in the savings rate. So for that reason, the households still have a low leverage level. They still have a lot of momentum. We have the jobs picture, which is really positive. It's important not to get too pessimistic about the economy. At the same time, before the pandemic, our economy wasn't really lighting the world on fire with growth. And we're kind of headed back to this 2%, rate of growth. But I don't think it comes from the household. I think the household's in really solid shape.
So it's a 2% run rate of growth, and you overlay inflation on top of it. Where's the tip point on nominal GDP that can nudge us towards whether it's an NBER recession or something sort of kind of like? Is it an under 6% nominal GDP where the ROM bells go off?
To me, really, what you started with was with earnings. I think of nominal GDP and pull it into earnings and revenue growth. And when we look at the economy, which is relatively solid, and markets, right, which are challenged and are experiencing a lot of volatility, the connective tissue there is the fact that Fed rate hike cycles are damaging to multiples. And we are looking back historically, we have not seen a Fed rate hike cycle where we've had multiple expansion in the first year. So it means you've got this solid, companies, yes, inflation, winners and losers. But if you get in there, you've got solid earnings growth. You just can't capture it through the top line indices like you used to be able to.
Well, Laura,
you need to dig into credit. You need to dig into
On the subject of earnings growth, the profitability of companies has hinged increasingly in the face of inflationary pressures on the ability to exercise pricing power, to pass those costs on to consumers. When do we reach the point in which consumers no longer tolerate those higher prices?
So this has been the unique thing about this cycle. Companies have been actually able to pass along those higher prices for the first time. Back in the 2010s, when we had some energy price spikes, companies really could not pass that along. I think, company margins are going to erode somewhat, but they're so generous right now. And again, some companies, when they experience higher input costs, to them, that means higher revenue. Inflation also makes the investment cycle go faster. We're going to see companies be rewarded for investing, not punished as they have been for the prior 15 years. So it's a different, I think, reaction to inflation. And we're going to see companies that are really investing around cost cutting be rewarded.
Well, and finally, on that point, Mike Wilson over at Morgan Stanley raised the wage issue for companies and that is going to put in margin pressure. When it comes to wages, we obviously saw 5.6% in the data for March we got on Friday. What is your expectation about whether or not we reached the price spiral portion of that?
That is, I think, the number one thing that the Fed is watching. And we'll see wages continue to increase. But as long as that's really focused, I think, on the more service-oriented, lower income cohort, the Fed is going to really focus on whether or not that cohort is keeping up with inflation. So I think when we get the lower end services jobs, inflation really in the double digits and staying there, that's when the Fed starts getting concerned. But they're watching the dispersion of wage growth more closely than the top line.
Laura, thank you. Laura Rain there on a week ahead and the months ahead for this Federal Reserve of FS investment. Some comments coming from Valdis Dombrovskis of the EU in the last couple of minutes, saying the following: the EU must do more to stop the atrocities in Ukraine, must step up the pressure on Russia. Going on to say, on sanctions, for the Commission, nothing is off the table. Of course, there'll be questions about the appetite to do something around energy, Tom. Valdis Dombrovskis also saying, currently expecting a slowdown, not a recession.
I'm speechless, John. I mean, we've heard some comments. You mentioned something an hour and a half ago of the talk, if you will, out of Europe. And I go back to the military effort where Russia has moved away from certain geography, no doubt to pick up strength in other geography. Then what is the response of Ukraine to that? To me, that's far more important than a lot of jawboning.
Each and every time there's evidence that Russia has escalated this invasion in Ukraine, we're having the same conversation. And Kelly, and each and every time, the Europeans fall short of doing something on energy. And the commentary you hear now out of Europe is that there isn't much left. What else is there apart from energy?
Right, you can tighten existing sanctions when it comes to SWIFT, but really that's just incremental steps. It's not any blowout sanctions that potentially could have some impact on the Kremlin. And I wonder, when you hear Valdis Dombrovskis saying that we expect a slowdown, not a recession, is energy what makes that difference? Is energy sanctions not being on the table why Europe doesn't fall into a recession? That's what we heard from Christian Saving, the Deutsche Bank CEO, earlier, saying that if you see an oil and gas embargo on Russian energy for Germany, that means a recession, full stop.
And bottom line for the Europeans and worldwide right now, the price of energy is going higher. This coming out of Saudi Arabia this morning. Prices are up for Asian customers, Tom. For European customers, for US customers, prices are raised as well. All oil prices for US and Europe in the month of May. That's Saudi Aramco, Tom. Out of Saudi Arabia in the last couple of minutes.
It's going to be oil. What else is it going to be? I mean, we're seeing with food. I saw some blurb over the weekend on Germany with food up as well. You just wonder what it could be. Look at the new headline coming out on Lithuania, downgrading diplomatic relations with Russia, very sensitive there, so close to St. Petersburg.
It sets us up for a really difficult back half of the year. Jamie Dimon in the annual letter talking about the volatility. We need to be talking about higher rates, Tom, softer growth, persistently higher energy prices as well, TK. When does that fade?
I think the uncertainty, you say the back half of the year, I'm thinking back half of April.
I know.
Back half of May, let's get to the summer.
Q2 starts. I don't even think I can think about a summer just yet, Tom. Futures up 0.1% on the S&P. Krishna Mamani of Lafayette College coming up a little bit later on Bloomberg TV. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Ritika Gupta. Leaders from around the world are condemning Moscow over multiple reports that Russian troops have committed war crimes in Ukraine. Russia could face more sanctions over the matter. Broadcasters have shown images of people they say are unarmed civilians killed execution style. The Kremlin says many of those images are fakes. Ukrainian President Volodymyr Zelensky made a surprise taped appearance at last night's Grammy Awards. Zelensky implored people to speak out about the war on social media and TV. He told the music industry, quote, "Our musicians wear body armor instead of tuxedos. They sing to the wounded." President Biden is calling on Congress to act on gun-related issues after a deadly shooting in Sacramento, California. Police say at least 2 shooters opened fire early Sunday as bars closed for the night. 6 people were killed and 12 others were wounded. In China, fast fashion e-commerce startup Shine is weighing a funding round of an evaluation of about $100 billion. Bloomberg's learned that it's in talks with potential investors, including General Atlantic. Hitting the $100 billion mark would make it the 3rd most valuable startup in the world after ByteDance and SpaceX. Hertz plans to buy 65,000 electric vehicles from Polestar over the next 5 years. That's a bet that renters are both curious about EVs and eager to drive brands other than Tesla. Polestar is controlled by Volvo and its owner Geely. Last fall, Hertz announced it was buying 100,000 Teslas. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Good morning, everyone. Bloomberg Surveillance. Kaylee Lyons in for Lisa Bramwitz. I'm Tom Keene. And right now, quickly, a chart on the story of the day. Mr. Musk passively looking at Twitter. Kriti Gupta with an active chart. Kriti, what do you have?
Yeah, a 9.2% stake. This, of course, follows criticism that he has about the platform, about free speech, even a suggestion that he wanted to create his own social media platform. But that brings me to my chart of the day here. We're looking at Twitter shares relative to other social media stocks, not just here in the States, but around the world. And if you actually look at what shares are doing, not just today, which are rallying as high as 26% in the pre-market. But if you look at them since the start of the year, for our radio audience, what you need to know is that the line goes up from the start of the year. There is outperforming its social media peers. Now, a lot of this does have to do with simply the war in Russia, the idea that Twitter is being used for those minute-to-minute news when it comes to what the updates are on that part of the world, but also coming from a fundamental piece, Bloomberg Intelligence looking at them, pointing to new product launches, including Twitter Blue, ticketed spaces, super follows, that could actually help them exceed their revenue target of $7.5 billion in 2023.
Kriti, thank you so much. Greatly appreciated. Kriti Gupta there, and we'll have this story through to the close today on Twitter. It is a joy right now to speak to one of the lightning rods of international relations and our study of our relationships worldwide, and that is John Bolton. Of course, Ambassador Bolton with so many tours of duty and always someone looking at the force and power of Russia. Give us a measurement on this Monday morning, John, of the force and power of Mr. Putin.
Well, he suffered some severe setbacks so far in almost 6 weeks of war in Ukraine. There's no doubt about it. The Russians obviously miscalculated the extent of Ukraine's resistance, which has been heroic, and they miscalculated the capability of their own military, which has had one failure after another from the strategic level on down to simple logistics like food and gasoline. Now, all that said, they still control a considerable amount of Ukrainian territory. Yes. And it looks like they're trying to get their act together, regroup, pursue more sensible objectives. I'll have a piece up on 1945.com a little bit later this morning that says, I think what many are also saying, they're going to go after the Russophile areas of southern and eastern Ukraine.
Right.
And let's remember, when we come to negotiations, which we're not in seriously yet, but when we come to it, the more land Russia holds, the harder it's going to be to get them to give it up.
John Bolton, I want your perspective as we talk to Admiral Stavridis as well about what has been underreported, in my opinion, which is the land grab along the Black Sea. What should be the American response to the territory taken down to Odessa?
Right. I think this is a central part of what Putin's objectives have been, in which, frankly, if he had focused on the South and the East at the beginning of the war on February 24th, he might already have. Putin wants the entire north coast of the Black Sea. I don't think there's any question about that. He wants Odessa. wants all that territory because he thinks it's strategically critical to Russia and because it will landlock Ukraine. So either things that have been coming through Odessa into Ukraine now will have to pass through Russian tolls and pay for it, or they're going to have to completely switch their trading routes through Poland and Hungary and other Eastern European countries. It will give Putin enormous strategic leverage over Ukraine. And as I say, why he didn't go after it first, I don't understand.
I want to turn, Ambassador Bolton, to the reality. You came out of Yale. You worked with David Keene. You worked with the no relation to me, I should point out. You worked with a Republican Party that wasn't afraid to project. Then you worked for Donald Trump, who had his unique isolationist tendencies. Describe the new American isolationism. Describe the new GOP isolationism.
Well, I think there's always been a strand of isolationism in the Republican Party. I think it's actually broader in the Democratic Party. It takes a somewhat different form. They think the world's going to be saved by multilateral organizations like the United Nations. That's kind of delusional. But the Republican delusion is that none of this overseas, none of this in Ukraine has anything to do with us. I think it has everything to do with us. Our way of life depends on interests scattered all over the world. And the isolationists in the Republican Party don't see that, don't see anything worth defending. They'd find out when they began to disappear. But I am actually hopeful. I think the isolationist strand in the Republican Party has shrunk almost back to historic low levels. I think Biden's catastrophic withdrawal from Afghanistan last summer was a major factor there. And I think if you look at Republican views on assistance to Ukraine in the current conflict, you can almost see those two events pushing the party back to its real Reaganite foundations for the contemporary world.
So what would be an appropriate response from the United States, or for Europe for that matter, for alleged war crimes in Bucha and other cities in Ukraine?
Look, this is there's little doubt based on the evidence we had of real barbarity on the part of the Russians. But look, it's nothing new for them. They've done this in Syria. They did it in Chechnya. And so we shouldn't have been surprised by it. But I'll tell you something. None of this intimidates Vladimir Putin or the Siloviki, the men of power around him. These are the hard men of history. You can threaten them with war crimes, prosecutions, all you want. It's not going to slow them down in the slightest. I think I've written on this extensively for over 20 years. These international criminal court type operations do not deter these things from happening, and they're very rarely able to administer punishment. This will have to come when Russians get control of their government again and take actions, if they desire to, against the people who committed the crimes in their name.
Okay, so if Vladimir Putin has proven time and again that he is not capable of being deterred, that deterrence tactics to this point have not worked, what will he respond to? Does use of force need to be on the table? And when the U.S. and other countries like the UK today, for example, saying that they don't want to escalate, they don't want to be escalatory, what would escalation actually look like? How far can they take it?
Well, I think Putin would have responded to adequate deterrence, but he hasn't seen any of it. You know, there's a lot of nattering by leaders of NATO countries about how united the alliance is and so on. And yet we can't get the leader of the free world to agree to the transfer of Polish MiGs to the Ukrainian Air Force. He said again yesterday it would be World War III, which it certainly would not. The West clearly failed. This is a shame that we will have to bear in not being able to deter Putin from starting this invasion.
John, that was very rude and undiplomatic of you, as you've been called before. Let's drive the conversation forward to what to do now. Are you advocating that the Secretary of State needs to take the Bolton rude and undiplomatic and be more assertive, more aggressive, or can we have a...
Look, I think we have been plenty graceful with our allies, and we're still not getting them to do enough. And we're not doing enough either. I think if you listen to some Europeans, the British in particular, that they say we're constantly being dragged along by Europeans like themselves urging us to do more, or pressure from both the House and the Senate, Democrat and Republican alike. The fact is, if Putin retains territory after this is over, he has won. And his effort to reestablish Russian hegemony and maybe even sovereignty in the space of the former Soviet Union has been very painful.
I don't mean to cut you off, but this is too important, John, right now, and that is a new domino theory moving from Russia west. Are you suggesting there could be a domino theory here if he takes some of Ukraine?
Yeah, he already has some after the 2014 invasion, to which we did not respond effectively, and he's obviously going to try and get more. He's got plenty of other targets beside NATO countries within the space of the former Soviet Union, but if you ask the Poles, if you ask Estonia, Latvia, Lithuania, they are deeply afraid that they're very high on the Russian target list, and an ineffective, indeed feckless Western response will simply encourage Putin.
Okay, so that's looking west. What about to its other border with China, Mr. Bolton? What role do you think China is playing actively or inactively here?
Well, I wrote in the Wall Street Journal a couple of weeks ago, I think Russia and China have an entente here. It's not a full-up alliance, but it's an understanding. I think China has Russia's back in this conflict, and they'll expect Russia's back when they launch their aggressive actions, whether it's against Taiwan or more in the South China Sea or elsewhere along their periphery in the Indo-Pacific. Right now, I think what the Chinese are doing is making their financial institutions available to sanction Russian banks and others to, in effect, launder that money back into the financial system. And I think although China already purchases significant amounts of Russian oil and gas, they'll be happy to purchase more if we had an effective embargo, which we don't. So these are the kinds of relationships. It doesn't require military assistance from China. Economic assistance is very important. And you've got other major countries like India, which, according to press reports, quadrupled its purchases of Russian oil in February.
John, I got to get this in. It's too important. In this conversation, you mentioned we should not worry of World War III, and perhaps we should not worry of Mr. Putin and his nuclear abilities. How do we manage that? How do we develop a confidence that we will not find some form of world war?
Well, I'm not saying we shouldn't worry about it. Of course we should. But right now, we failed to deter Putin, and he's deterring us. And I think if he can get what he wants for free without effective allied response, he's going to be encouraged to do more. I think providing the Polish MiGs is actually a pretty small piece here. We're now in a race of time with the Russians. We've got to get more military assistance to the Ukrainians. We should be doing a lot more. I think a lot of options we had are off the table. Biden gave them away in early December when he took American force away as an option. By the way, got absolutely nothing for that. So we're constrained by what's gone before us, but I think we should be absolutely clear here. If we allowed Russia to get a major part of its objectives in Ukraine, we have suffered a significant defeat.
John Bolton, thank you so much. John Bolton,
thank you for having me.
Always thoughtful and controversial, to say at least. Kaylee, you know, the talk of diplomacy is great, but what a shock this weekend, the images that we saw.
Yeah, absolute human tragedy on full display in Bucha and beyond, Tom. And the question is going to be, what is the West response? Europe has vowed retaliation for alleged war crimes. What form will that actually take? We're getting headlines out now from Ursula von der Leyen, the EU Commission president, calling for a global response as it will coordinate with Ukraine on that investigation. But anything short of sanctions and an embargo on Russian fossil fuels, Tom, where does that leave Europe?
And around this, the data check this morning, we can look at oil again off Saudi news. The oil up 2%, Brent crude back to 107. Not a big move, but nevertheless, there it is. And I should point out, wheat this morning with a 2% move up. That bears watching as well. Please stay with us through the day in the equity markets, the shock of Mr. Musk, and Twitter as well. We continue on international relations at 12 noon. Ian Bremmer. Please stay with us on radio, on television. This is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Live from New York City this morning. Good morning, good morning. Kicking off a brand new trading week with equity futures basically unchanged. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, yield curve inversion.
The yield curve inversion.
It's an alert but not an alarm signal.
The inversion of the yield curve raises the risk of recession.
That's a more challenging environment for equities.
But there are a number of ways to define this.
It's telling you that the economy is strong today, but it may not be in the future.
You need to dust off the checklist for a recession.
It's telling us one other thing.
The truth tends inverting.
It's telling us that the Fed's policy reaction function right now has moved very, very much towards fighting inflation.
In terms of the bond market of yield curve inversion.
This is where the debate is being had.
This is the markets readjusting to a much faster pace.
If they don't get what they want.
If the Fed needs another lever to pull on to fight inflation.
Expect them to be even more hawkish.
Joining us now to discuss Morgan Stanley's Caterina Simonetti, Schwab's Colin Martin, and Christian Mamani of Lafayette College. Let's start with you, Caterina. I want to come straight to what's happening with the yield curve. Just about negative 2/10 right now by 3 basis points. How useful is this as a measure of anything?
Well, I think, Jonathan, the biggest concern here is, is this something that is going to indicate the fact that we're going to have a recession in the near future? And in our view, it's not necessarily so. We're concerned about the market. We're concerned about valuations. And there are so many risks that we have that we're dealing with that we had before the war in Ukraine started, which of course amplified the situation. But as we're looking at the yield curve, it's one of the components that makes us a little bit concerned about the recession, maybe not this year, but perhaps in 23.
You can pick your period, any period that explains why things will be bad, why things will be good. David Costin of Goldman Sachs picking up on this period right here. Take a listen to this. The S&P has typically posted positive returns in the 24 months following yield curve inversion, but the early 1970s experience when the S&P entered into a bear market offers an example of the downside risk to equities amid the current high inflation environment. Krishna, can you respond to that?
Well, so I think the key point here is focusing on inversion is really looking at a mirror. It's telling you things that you already know. The Fed is going to tighten, and the Fed is going to tighten aggressively. And even the Fed has no idea how much it will have to tighten to get the current bugaboo of inflation under control. In that sort of an environment, kind of looking at yield curve and what happened in 1843 or 1937 is somewhat irrelevant. The fact of the matter is the Fed is on a tightening path, and the tightening path is extraordinarily uncertain on the upside. That is, they are going to tighten a lot more, perhaps, than what the market is discounting.
You think there's big upside risk, and that's something echoed really in Jamie Dimon's annual letter as well. It read the following: the stronger the recovery, the higher the rates that follow. I believe this could be significantly higher than markets expect. Colin Martin, do you agree with that?
Well, I do think there are a lot of risks out there when you consider what the Fed's telling us and their aggressive outlook, and really the markets are mirroring that with their aggressive expectations for the pace of rate hikes. The Fed is telling us that the economy is strong enough to withstand this. They're telling us that the labor market is strong enough to withstand this. I'm not convinced just yet. I do think there are a lot of risks out there where I don't think there's necessarily a huge upside surprise. I think the big risk is just the demand destruction with inflation, and that's money spent at the pump that can't be spent elsewhere. And we were already facing some risks as we came into the year right now. And one thing we look at is, fiscal stimulus is well in the rearview mirror right now. And when you consider household balance sheets, a lot of that is really at the higher upper income levels and not so much on the lower income levels, and they're getting pinched even more at the pump. When you throw in Fed tightening, it throws a bit more of a murkier outlook right there. So we're not as optimistic as upside risks right there. We do think it's balanced, but the Fed does have to sort of thread the needle. They're telling us they're going to be very aggressive. They've told us that they are willing to be too aggressive, but we'll see where we are in 6, 9, 12 months and how the economy is really going to withstand that aggressive pace.
Well, looking ahead to May, I think the outlook is pretty clear, not murky. They're ready to go 50 basis points. The San Francisco Fed President Mary Daly had this to say to the Financial Times: the case for 50, barring any negative surprise between now and the next meeting, has grown. I'm more confident that taking these early adjustments would be appropriate. Mike McKee joins us now for more. And Mike, let's kick things off with Jamie Dimon's language. The Fed has a hard job to do. Let's wish them the best. They've got a tough one in front of them, haven't they?
Yeah, he said he pities the Fed and what they've got going forward. Now, Krishna said that it's like looking in a mirror when you look at the yield curve. Well, you know those funhouse mirrors that distort the way you look? You take a look at yield curves, you got to pick the yield curve, because the 2s, 10s, the white line there, yep, that's inverted, and it is telling a story. But what is the 3-month 10-year telling you? It is not inverted, it's fairly steep. And the Fed is also looking at the real yield curve, which is also steep, does not show signs of inversion. So pick your yield curve, pick your outlook. The Fed is likely to go 50 basis points. Now the question becomes, what happens with the balance sheet for the markets? Wednesday, we get the Fed's minutes of their last meeting, and some of these questions may be answered. They want to know, what's the roll-off going to be? It was rising caps last time. They started at $6 billion, went up to 30, and with MBS started at 4, went up to 20. Now the balance sheet's a lot bigger, so probably the caps are going to be a lot higher. But the question is, does it have an effect on the yield curve? Because everybody is now thinking that the Fed is going to make a mistake, even though they've only just started. Look at this. This is Fed funds futures versus euro dollars out 18 months, and it's showing you that the market is already starting to price in rate cuts in 2024, even though we have just started with rate increases. This is a most unusual time. Hard to know what to make of it all. And as Jamie Dimon says, you got to pity the Fed.
Pity the Fed. Good luck to them. Some people might say they got themselves into this position. The Fed guessing game is a sport. You know that. We both participate. We both play that game. Have we fully clarified the reaction function, though, of what this Fed would do, what this committee would do? Mike McKee, if we got to the back end of this year and growth was slowing, but inflation was still where it is right now?
Well, we haven't clarified it, but from what Jay Powell has said, they will continue to focus on unemployment. Now, they believe unemployment's going to, they will continue to focus on inflation. I screwed that up. If inflation is still rising, now if the economy slows a lot, they may change the pace of tightening, but they have said they're focused on inflation now, trying to bring that down. They think it'll come down anyway. We'll see over the next couple of months.
Mike McKee, thank you very much. Krishna, that question to you. Is the Fed willing to contain inflation if the price might be a recession?
So I think their rhetoric so far, really, as Mike pointed out, has been that they are singularly focused on inflation because where employment numbers are, they don't have to do anything on that front today. But the real question is, what is it that the equity market is seeing in all of this that we, perhaps in the bond market, aren't? And I think one has to speculate as to the resolve of the Fed. They may front load all sorts of tightening up front, and maybe they just stop because things have slowed down enough. We're doing a whole lot of things on the inflation front, maybe too hard and maybe counterproductive. I don't know if that is the case or not, but I think that probability is actually increasing rather than going down.
And this is something of Mike Wilson and the team at Morgan Stanley have picked up on. And here's the quote from them coming out from over the weekend. The bear market rally is over. That leaves us more constructive on bonds than stocks over the near term as growth concerns take center stage, hence our doubling down on a defensive bias. Investors face multiple headwinds to growth that will be harder to ignore. Katarina, can I come to you on that and ask you to build on that just a little bit more? How you're thinking about that dynamic? Back half of the year, growth slowing down. Does that become the dominant concern?
Of course, and Jonathan, we do see this as a bear market, and therefore the rallies that we're seeing, as exciting as they might be for investors, should be viewed as bear market rally. And the way that we invest into the bear market rallies, is there's a very specific tool set that we need to use. Specifically, we view this without shadow of a doubt as a stock picker's market. There's a lot of risk in index investing. We are concerned about, the growth possibility in S&P 500 as a general index, but you absolutely can find investment opportunities and attractive valuations with individual stocks and individual bonds. So, the name of the game is quality, is focusing on defensive sectors like financials, healthcare, industrials. We're a little bit less enthusiastic about goods. We are we're excited about possibilities in the service sector. But as Colin mentioned earlier, I think that what we need to focus on is the effect that higher gas prices are going to have on consumer behavior. And generally, consumer is the main driving force for this market. And as we're looking for a degree of normalization for inflation, which of course is something that Fed is looking at very closely, and they're going to be aggressive dealing with this, all of that brings us to the fact that we are going to have a very volatile market. And even despite of the bear market rallies, we have to be really smart about our stock picking.
Katerina Simonetti alongside Colin Martin and Krish Mamani. Around the opening bell, I'll ask Katerina how to distinguish between a bear market rally and something actually you might want to get behind. Coming up then, we'll get through that. Your equity market's doing okay, up 0.1% on the S&P 500. Let's get you some movers ahead of the open. We can do that with Abby.
Good morning, John. And one stock that's absolutely soaring, really helping out the futures, in particular the NASDAQ 100 futures, NASDAQ tech indexes. Twitter up sharply at this point, up 21.8%, of course, on the news that Elon Musk has taken a 9.2% passive stake, suggesting a shakeup of some kind could be ahead. As for Tesla, up modestly at 0.4% after the company did its pre-announcement of deliveries, as it does each quarter. Record number for the first quarter, more than 310,000. The company managing supply chain issues well. And NIO, the Chinese EV company, upgraded to a buy at UBS. The company saying that it's attractive after the big drop, and plus NIO's new product cycle. And then finally, Starbucks, though, not so much, down 3.8%. This, of course, as founder Howard Schultz has retaken the wheel as CEO. He's cut the buyback. Investors not liking that news, John.
Abby, thank you. Coming up on the program, President Zelensky rallying support.
On our land, we are fighting Russia, which brings horrible silence with its bombs, the death silence. Feel the silence with your music. Feel it today to tell our story.
That conversation up next.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Musicians wear body armor. Instead of tuxedo, they sing to the wounded in hospitals, even to those who can't hear them, but the music will break through anyway. We defend our freedom to live, to love, to sound. On our land, we are fighting Russia, which brings horrible silence with its bombs, the dead silence. Feel the silence with your music. Feel it today to tell our story.
Calls for new sanctions against Russia growing as deeply distressing images of civilian casualties come out of Bucha in Ukraine. Secretary Blinken condemning Russian forces.
You can't help but see these images as a punch to the gut. We believe that Russian forces have committed war crimes. We're tightening the existing sanctions. We're adding new ones. We're doing it in full coordination with Europeans and other partners around the world.
The Kremlin denying allegations its forces killed civilians in the region, tweeting the following: all the photos and videos published by the Kiev regime in Bucha are just another provocation. Joining us now, team coverage down in DC with Bloomberg's Anne-Marie, and from London, Guy Johnson. Guy, I've asked this question repeatedly through this morning. What kind of response can we expect from the Europeans?
John, Europe has a massive and growing problem here. On the one hand, and we heard this vocalized a little bit earlier on by the CEO of Deutsche Bank, Christian Sewing, if we see oil and gas being sanctioned, a recession is inevitable, his words. On the other hand, it is becoming increasingly clear, and you've only got to look at Chechnya and what happened in Syria, that terror remains part of the Russian arsenal. Terrorizing civilians remains part of the Russian arsenal. And there is the possibility, the distinct possibility, that we are going to see further shocking scenes coming out of Ukraine. As a result of which, what comes next is a really difficult question. On the one hand, you have a recession. On the other hand, you find yourself in a situation where you have to do something. We've got the ambassadors meeting on Wednesday, John. We've got the French who hold the rotating presidency. Emmanuel Macron talking about very clear indications of war crimes over the weekend, calling for sanctions on oil and coal. Now, remember, Russia sends around half of its oil products, its distillates, its diesel to Europe, around 70% of its coal, but gas is not included on Macron's list. And we are going to see a really difficult conversation happening here. But it looks like increasingly Europe is going to be forced down this road. But as Christian Sewing says, John, that probably inevitably means a recession.
AMH, your thoughts on this? The US's role in that difficult conversation?
It is a difficult conversation that Europe is having amongst themselves, and we're already seeing divisions between the East and the West. Lithuania over the weekend, although they are very small to Russia, they did cut off imports. They will no longer be importing Russian energy. The United States, what they want to do is try to aid Europe in this potential cutting off of Russian oil and gas, the dependence they have on Russian oil and gas. When you look at already what the U.S. sends to Europe in terms of LNG, Wood Mackenzie did a fantastic piece last week. 7 out of 10 LNG cargoes are already being shipped to Europe. That is because the price in Europe and the gasoline market is so elevated, it makes sense. More LNG would need to come online around the world to be able to fill this massive hole that is going on. So the U.S. is going to be a partner in trying to help fill that gap. But at the same time, Jonathan, as you mentioned earlier, they have yet to really call out the Europeans and embarrass them publicly. They want to make sure they remain in lockstep and they are supporting them in this decision.
AMH, thank you. Anne-Marie in Washington. Guy Johnson. Hey, Guy, looking forward to the show in about 40 minutes. Don't miss that as Guy runs you through the European price action off the back of a lot of this. To Guy's point, the words from the Deutsche Bank CEO, Christian Saving, the quote as follows: a further deterioration of the situation if there's a stop to imports or deliveries of Russian crude and natural gas, a clear recession in Germany would presumably be inevitable. Colin Martin, inevitable a recession in Europe even without that?
I don't know about inevitable, but it certainly heightens the risk. I mean, it's a very difficult situation in Europe right now. I mean, obviously the conflict has a major role just from a humanities standpoint, but there's a lot of moving parts. It's a very connected, European Union, and that does pose a huge risk. I mean, in the U.S., we're trying to do some things to alleviate some of the pressure on the energy markets, but at the end of the day, this is something that doesn't appear to be going away. I mean, here we are in early April, and it doesn't look like we're getting any closer to the end right now. So when we see headlines like that, and the longer this prolongs it, it does raise the risk. Certainly, I'd fall short of saying inevitable, though.
Katerina, would you fall short of saying inevitable?
Well, Guy, inevitable is a big word. I think that nothing is inevitable, but certainly the geopolitical risks that we're facing right now, introduced an entirely new variable. And I think if nothing else, we're going to learn that, being so dependent on Russian oil and gas is not good for anyone. So is there a high possibility of recession in Europe, specifically in Germany? Yes, there is a high possibility. There is a possibility of the recession here in the U.S. But in my opinion, no, it's not inevitable. We have to wait and see how things play out.
Krishna Mamani, your take, please.
Well, so let me try to throw a bomb here. I think there is a decent possibility that we look back on the current situation 6 months from today and realize that the recession had already begun in Europe. So I think if it hasn't begun, if the current trends continue, and there is no reason to be extraordinarily hopeful on that front, I would agree. I think a recession in Europe is either already underway or it's definitely inevitable.
Krishna, if that's the case, how do you differ on your view of Europe versus the United States, of European banks, which have been a big trade coming into this year?
So I think overall, the vulnerability of European markets has been significantly higher, and for that matter, all international markets have been significantly higher than U.S. because we are still a very domestic economy, and the current growth rate has a little bit of momentum, and I think that probably lasts. I think if you look at global PMIs, they have been going down while the U.S. PMIs have gone down, but have held pretty reasonable. So I think for a U.S. investor, the case for international investing was pretty spotty to begin with, given the performance over the last 15 years. And the current environment, I don't know how you make that case at all.
Colin, can I come to you on some of the data we have seen out of the United States? The payrolls data was fantastic. Everywhere you looked, point by point, through the whole thing. The ISM less so. Yes, it's still an expansionary territory, but it's slowing down. Is that a flashing light on your dashboard at all?
Yeah, it is a flashing light. Even though the absolute number is still strong, well above 50, that seems to be the line of demarcation. It's been declining, and expectations are for it to continue declining. So that does pose a risk. We're seeing it with PMIs across the globe right now. Now, as you mentioned, though, labor market's strong. I mean, that's the good news, and that's something that we're focusing on right now, and it's clearly something that the Fed is focusing on. Last Friday's number, with the exception of the minor miss on the monthly non-farm payrolls, the underlying details we're very, very strong. What we're looking at most importantly is the labor force participation rate and the prime age labor force participation rate. That can help bring down wages. Not that we're looking to see wages get cut, but it could bring down some of those pressures that could lead to some sort of wage price spiral. We're already starting to see that while the year-over-year average hourly earnings continues to tick up. If you look at the last 3 months or so, it appears to be moderating a little bit. And if we do continue to see people join and re-enter the labor force, that's a good thing for wages and really helps us prolong the recovery and prolong just the growth we've been seeing. So it is flashing some lights. The decline is not a good thing, but there is underlying strength of the economy right now.
Colin Martin sticking with us with Krishna Mamani and Caterina Simonetti. Coming up on the program, the morning calls and later, Twitter shares absolutely soaring after Elon Musk takes a stake in the firm. Dan Ives of Wedbush walking us through that story very shortly. 7 minutes out from the opening bell, equities doing okay. From New York City, this is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
We just about squeezed out a week of gains on the S&P 500 last week as we kick off a brand new trading week, just kicking a little bit higher, 5 minutes out from the opening bow, up 0.1% on the S&P, on the Nasdaq 100, up 0.25%. That's the price action here, the morning calls. We kick things off with Wells Fargo cutting its JP Morgan price target down to 150, trimming estimates by 5% to reflect a combination of seasonal factors. Next up, Loop Capital downgrading Crocs to hold, $80 price target, pointing to the stock's price evaluation and weakening investor sentiment. And finally, Wedbush maintaining its outperform rating on Tesla after Elon Musk takes a major stake in Twitter, expecting the CEO to properly balance his responsibilities. That stock is up by 0.5%. We'll get to the man behind that call in just a moment. Not Elon Musk, but the next best thing. Dan Ives of Wedbush. He'll join us very, very shortly. From New York City, your opening bell, 4 minutes away.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
23 seconds away from the opening bow this morning. Good morning to you all. Here's the shape of the equity market, up a tenth on the S&P. On the Nasdaq, up about 0.2%, squeezing out a week of gains just last week, even with that yield curve inversion we've seen so far. Let's see opening bell in New York, switch on the board and get to the bond market. The curve a bit steeper on the session today, with yields just a little bit higher at the long end and a little bit lower at the very front end of the curve. In the FX market, euro weaker, euro dollar down 0.5%, a break of 110, 109.87, and crude picking up as the session grows older, up by 3.5%. WTI 102, and let's call it 70. Around the open, about 15 seconds in, a flat open on the S&P 500. Energy top of the pile with that rally we're seeing in the commodity market for crude. Energy up by 0.6%. Utilities down about 0.6%, and one stock taking center stage. It is Twitter. Elon Musk becoming the largest shareholder, taking a 9.2% stake. Ed Ludlow joins us from the West Coast. And Ed Ludlow, I have to say, I was not expecting this one.
Yeah, I was not expecting this one this Monday morning either. Look, first things first, that regulatory filing, 13G regulatory filing, dated March 14th. There's been a series of tweets throughout the month of March from Elon Musk asking his followers essentially what they thought about free speech on the Twitter platform. He said he'd consider his own platform, but that regulatory filing predating it shows that he's been thinking about this for a little while. I'm seeing a gain of 25% on Twitter, John, which is about $8-9 billion of market cap added in a single day, best day since Twitter IPO. That's the important chart. Elon Musk becomes the single biggest individual shareholder. Look at his stake relative to that of Jack Dorsey, who of course stepped down as CEO of Twitter in November of last year. This is a tough one to crack, John. Like, clearly, Musk is thinking about some kind of action, although because it's a 13G filing, this is a passive stake we're talking about. But Twitter's not done that great, right? User growth hasn't kept up with levels that the company would hope. They're going through changes with a new CEO, with Parag Agrawal. And the question is, how real is this? Wall Street hypothesizing this morning, John, that, yeah, it's a passive stake, but how quickly does this become a more active stake in Twitter?
Would you describe Elon Musk as passive, Ed Ludlow?
No.
Isn't that the issue at stake here?
Yeah.
There's nothing passive about Elon Musk. What does he want to do with this?
Yeah, look, he's been skeptical, critical of mainstream media. You know, he's talked about how he likes to follow individual journalists and their reporting, but broadly he's critical of traditional media. He is basically hinted, although we don't know for sure what his intentions are, that he wasn't happy about Jack Dorsey stepping down as CEO of Twitter, that he didn't really like the person that replaced him. But again, How much of this is fun and games from Elon Musk? How much is it a serious play? Twitter is the only public stock that Elon Musk now owns other than Tesla, where, of course, he's very much an active investor. He's the CEO, so it's going to be a hard one to read. Interesting what Dan Ives has to say, John.
Yeah, looking forward to that. I'm going to catch up with you again as well, Ed, in about 10 minutes, so don't go anywhere. The stock's up by about 22%. That's up by about $6.9 billion in market cap based on that move in the first 3 minutes of trading. Let's get you some broader moves, some bigger moves. Not as big as this one, Abby, but some moves elsewhere.
Certainly not as big as that one. And sticking with the Elon Musk theme, let's start out with the shares of Tesla, which had been higher by about 0.75%, now ever so slightly lower. This, of course, after the company pre-announced deliveries for the first quarter. A record number, more than 310,000 vehicles were delivered, suggesting the company can manage the supply chain well. But right now, investors kind of backing off a little bit. Maybe they're looking at Twitter. Occidental Petroleum up 0.9% in sympathy with oil higher, and Warren Buffett's stake is above 10%, so investors may like that too. Alibaba up 3.7% as China, of course, has made the audit news official, which will help these companies keep trading here in the U.S. And then JP Morgan down 1.5%. Yields basically mixed, and also, as you know, John, this company could potentially have decent exposure to Russia.
Abby, thank you. I think April 13th, JP Morgan earnings, so next week, just after CPI as well, and an ECB decision in the mix too. A lot to get through next week. This market has had absolutely everything thrown at it. Geopolitical concerns, an inverted yield curve. On the year now, it's down just 4.75% and within striking distance of all-time highs. Katie Lyons, what a move.
Yeah, about 5% off of the record high hit in early January, up 9% now from the low hit after Russia invaded Ukraine. This market is working through everything thrown its way and rallying to the upside in defiance of a lot of the bears that are out there. And from a technical perspective, the index has now actually undone a so-called bearish head and shoulders pattern, rallying past that early February high of 45.95, which could indicate, according to technical analysis, a target of around 5,200 is feasible. But of course, not everyone agrees we're headed in that direction. Mike Wilson over at Morgan Stanley saying what we've just witnessed was a bear market rally, and it is now over. Worth noting, though, what led that rally basically was all of the stocks that were the worst performers during the 3-month downtrend from mid-December to mid-March. The bottom 10% of the market over that period, during which it was down 57%, now up 22% since March 14th. The second worst 10% down 41%, then up 17% since that time. The pattern holds basically all the way down until you get to the top 20% of the market during the down period. Now, of course, we are in April. Historically, it's a good month for stocks, actually the best month for the S&P 500 over the last 25 years, but there remain risks, which you, of course, just listed, John, including earnings, inflation, Federal Reserve, and now growth concerns as well, reflected in an inverted yield curve. But looking back at history, it's taken an average of 18 months from the first inversion of the 2-10s curve for the S&P 500 to top out. If you sold right at the point of inversion, you would miss out on a 19% rally on average until that top. And in 5 of the 7 years we've seen an inversion in history, the S&P 500 was higher 1 year out, John.
Kelly Lyons, thank you. Just a bit of breaking news. Let's cross over to Abby to get up to speed on that. Hey, Abby.
Hey, John. Well, we were just talking about JP Morgan, and we do have some breaking news on JP Morgan. Jamie Dimon, the CEO, may remain the chair, JP Morgan's chair, when he eventually quits as CEO. The stock right now is down about as much as it had been before, about 1.6%. Again, Jamie Dimon may remain the JP Morgan chair when he eventually quits as CEO. We'll bring you more information as we have it, John.
Abby, thank you. A bit more detail on that in our story from Hannah Levitt this morning. The bank plans to separate the roles, quote, upon the next CEO transition, whenever that might be. This is in a statement today. The measure remains, quote, subject to the board's determination of the leadership structure that best serves the firm and its shareholders at the time, according to the bank. Many shareholders, quote, expressed a general preference for separate chair and CEO positions. Goes on to read, I'll keep quoting this for you. Notably, a substantial majority of those with whom we engaged, including most of our top holders, indicated support for a policy that would enable our current CEO to serve as a non-executive chair at the next leadership transition. Of course, every time Jamie Dimon is asked about this, he'll keep saying 5 years, but clearly there's some thought going on here. We'll try and build on this through the hour, through the day on Bloomberg TV and radio. Katerina Simonetti, I want to come to you, not on this, on something else. You talked about bear market rallies. Can you help me understand how you identify what is a bear market rally and what is something that you don't want to get behind?
Of course. So over the last couple of years, we enjoyed an amazing bull market where, fueled by the stimulus, fueled by the post-COVID recovery, and investors got used to this, very attractive gains in sectors like technology, in the areas that were benefited from this post-COVID and COVID environment, as a matter of fact. And in the bear market, which in our view is exactly where we're at, we have to break out a different playbook. This market is going to show us big rallies. This market is going to show us big pullbacks, but same investment strategies that worked for us during the bull market are not going to work here. We have to pay super close attention to valuations. We are excited about the earnings that seem to be positive and about the employment numbers that look good, but we are fully expecting earnings revisions, and we're expecting them to be negative. So what does that mean? That means that we have to look for companies that have attractive valuations, that have the pricing power, that have competitive advantage, that are going to be able to be positioned to make money in this bear market. I mean, quite frankly, there's more opportunities to make money in bear markets than sometimes in the bull markets that tend to be a little speculative. So this is the time to position portfolios for quality. This is the time to dig in. This is the time to pay attention to real yields, because the other factor that we're dealing with, of course, is inflation. I mean, it changes everything. We have to look at our portfolios through the perspective of real yields, through the perspective of quality. We have to get away from the sectors that worked for us before and pivot towards quality, pivot towards the yield, pivot towards, allocation to the sectors that present attractive inflation hedges that historically worked in this environment. And, this is not the end of the world. Bear markets happen, and this is what we have right now. And, the rallies that we have, we can be excited about them, but we can't be fooled by them. We have to take advantage of them, but position portfolios for the long run.
Krishna, you know how this works. I could get 10 guests on the program and ask them what this is. Some people might agree with Katerina. They'd say this was a bear market rally. Others might say, we had a correction. This is the rally. We're still in a bull market. Get behind it. How do you distinguish between the two? What do you look for?
So I think you can only tell that this was a bear market rally in hindsight. Kind of asserting that this was a bear market rally is very difficult, just as a matter of fact. Having said that, I think I agree with their position. That is, given what we are facing, which is a significant rise in Fed policy rates and uncertainty with respect to how far they are going to go, kind of saying that we have, the bear market is over and now we are off to the races, I think is kind of difficult to square with what we face on the policy front. And I think in that, it doesn't mean that we won't have sectors of the market that will do well. But positioning your portfolio, even if you want to maintain risk exposure to equities, I think positioning your portfolio to the quality end of the market is probably the most efficient thing you can do, where you kind of balance your upside and downside appropriately.
Hey, Krishna, when was the last time you were this bearish?
Not for 15 years, for sure.
That long? I mean, the reason I ask is, this is a real change in tone from you.
Yeah, so I think if you think about it, the driver of my optimism ever since the financial crisis was the fact that inflation was going to remain dormant, and therefore the policy rates are going to remain low. In that sort of an environment, if you generate any bit of growth, you are going to get paid fancy prices for that. And I think in the last year and a half, all of that has gone out the window. And there's an argument to be made that it may have gone out of the window for the next 2-3 decades, because overall, because of increase in defense spending and uncertainty with respect to commodities, may actually put a cap on how low interest rates can remain for the next decade. So I think this is last year was a pivot point, but it may be a bigger pivot point than what we are appreciating today.
Colin Martin, you get the final word, sir. The final word, please.
we're not as pessimistic there. The final word I'll pivot to bonds a little bit, because you're talking about stock bear market rallies. As it relates to bond bear markets, we get this question a lot, and we have some good news for investors out there. We're not necessarily calling this the end of the bond bear market. We do think yields can move up a little bit from here, but we think the worst is likely behind us. When you look at that first quarter performance, there was really nowhere to hide in the bond market. But when you look at what the yield curve is telling us right now, it's telling us that regardless of how aggressively the Fed hikes rates, that neutral rate is still in that, say, 2.5% area. And once the Fed gets too tight, it's likely to cut at some point. So we see limited upside for most of the yield curve right now. But what that means for a lot of investors is that there are opportunities out there. Even though the Fed just started hiking, I think there's this misconception that yields are still low and zero, and that's not the case. Whether it's with intermediate term, long term, or even a 2-year Treasury yield, there are yields that we think are attractive right now, well above average over the past 13 years post financial crisis. So I think investors should take a look at the opportunities out there and consider that we don't think yields aren't going to rise that much further from here.
Colin Martin, alongside Krishna Mamani and Katerina Simonetti, to the three of you, thank you. Coming up, Elon Musk taking a 9.2% stake in Twitter.
Technology has been just a structural margin winner over time.
That conversation up next.
Almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
technology has been just a structural margin winner over time, and it now accounts for a disproportionate share of earnings, much bigger impact now than it has in the past.
That was Laurie Cavacina of RBC. Speaking of tech, Elon Musk becoming Twitter's largest shareholder a week after pointing to a potential social media shakeup. The move fueling speculation after Musk tweeted 2 weekends ago the following: given that Twitter serves as the de facto public town square, failing to adhere to free speech principles fundamentally undermines democracy. What should be done? On the West Coast, Ed Ludlow joins us now for more. Ed, that stock is flying.
Yeah, I look at my screen, we're up 23%, biggest jump since the IPO on November 7th, 2013. I reiterate, John, that the 13G regulatory filing for this stake in Twitter was filed by Elon Musk, dated March 14th, a good 2 weeks before those tweets about the utility of Twitter as a tool in context of freedom of speech and his questions about what should be done. And you asked me in the last segment, why is Elon Musk doing this, or what does he hope to achieve? And it's interesting, if you look at his existing holdings, the first thing that comes to mind is that this stake in Twitter is the first public stake or public company stake that Elon Musk has held, apart from Tesla, right? Of course, he has private shares in SpaceX, where he's also the CEO, and Boring Company, but now this stake in Twitter as well, but it predates those questions he asked. So what's he to do about it? You look at the reaction from analysts on Wall Street, they do think that even though this seems to be a passive stake, because it's a 13G filing, that we could see more active role. And so we're waiting to hear from Twitter, of course, about what they think. That's the share performance of those companies over the last 5 years. If there's anything you can say, John, it's that, well, at least Elon Musk, the head of a public company, his company has done well, why Twitter's not performed as strongly.
Hey, Ed. Thank you, buddy. As always. Dan Ives of Wedbush joins us now. We teed that up about 10 minutes ago. Dan, talk to me. Your reaction this morning off the back of this news.
I think this is just the start of Musk on Twitter. I mean, ultimately, it's not going to just end with a passive stake. I think this will be an active, past the 10% threshold. And I think this really just starts what's going to be, I think, a broader strategic initiative for Elon at Twitter.
Where does that leave your view on Tesla?
Look, for Tesla, I mean, Musk, the old view that he takes his eye off the ball, we saw it with SpaceX, and ultimately Tesla's gotten stronger. In terms of the overall ecosystem, I think investors, even that I've talked to this morning, most view it maybe as a slight net positive, for ultimately Musk and the broader ecosystem. But when you look at Twitter, if there was a time that he was going to go aggressive, this was the time. I mean, apathetic share base, it's been one, I think, viewed as best days in the rearview mirror. He wasn't going to build the social media platform from the ground up. This was really what I view as just the start of a much broader campaign at Twitter.
Dan, you think this is personal ambition away from Elon Musk, the entrepreneur? Is this more about his personal views on things?
Oh, yeah, I believe. I mean, I think anyone that follows him over the last few months, I mean, this is, I think, it's crossed the line in terms of for him where it has become a little more personal. And I think it's something that, for his view of Twitter is one where he really does think that he could change the Twitter platform. This could be a new slate. It could be board changes. Obviously, behind the scenes, they'll likely talk. But then I think there's a better chance of me playing in the Masters this weekend than him just keeping a passive stake.
Well, Dan, I don't think anyone thinks he's passive. I think what we're trying to work out is what he's going to do with it. Dan, if you think he's going to be a little bit more active, what do you think he actually does with it? Never mind changing board seats and all of that. I want to talk strategy. Yeah. How would you get a read on what Elon Musk wants to do with this stake?
Yeah, I think there's probably three things. One, monetization. Monetization's clearly a laggard at Twitter. I think there needs to be a lot of changes, whether it's algorithmic or from a marketing perspective in terms of getting even new users, new demographics. So monetization, one. Two, from an advertising perspective, it's one that they're sort of viewed that they're losing in this social media game. And, I think he's going to, try to, embark changes at Twitter, which would be important. I think third, with Dorsey going more into the background, I think right now it's viewed by investors. There's a void from a leadership perspective. And obviously this goes into the whole Twitter platform. It's obviously created a lot of controversy. And I think Musk is viewing this that he's going to roll up his sleeves and try to change it. himself, or at least with partners.
Key man risk is an important feature of the story over at Tesla. Dan, I'm looking at your price target of 1,400. Right now we trade at about 1076. Can you talk to me about key man risk at Tesla? What is there outside of him?
Look, I mean, Musk, there's always been key man risk, but I don't believe, at least in the next 5 years, that he resigns as CEO at Tesla. I think until we start to get FSD rolling in the second half of the decade, right now, I mean, you look at Berlin, of course, Austin, the barbecue on Thursday. You know, Tesla and EV is really just hitting its next gear of growth. And I think there's always a risk around that with Musk, but I think what we've seen is that he started to build a bit of a bench under him. Turnovers, at least, started to decrease. But right now, in terms of this next leg of the EV story, and we saw with deliveries, I mean, Tesla is continuing to navigate Teflon-like almost, where others in the auto industry, it's really been a debacle.
Dan, just quickly, Tiger, the Masters, is this going to happen?
Oh, I mean, I think he has his press conference tomorrow. I think he plays, and I think that's why this week, UNC cuts the net down tonight. Tiger plays the Masters, a fabulous week for sports fans.
I imagine you got money on that. Dan, it's good to catch up. As always, buddy, Dan Ives of Wedbush on Tesla, on Twitter, and on Elon Musk as well. Coming up, your trading diary from New York City this morning. Good morning. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Happening right now, another ECB speaker talking up the prospect of ending negative interest rates by the turn of the year. Happening right now in this equity market, we're doing better than okay on the Nasdaq, up more than 1%, about 26 minutes in, up a third of 1% on the S&P 500. That's the price action. Here's the trading diary. The President of the United States speaking later, 1:45 Eastern Time, on supply chains. Tons of Fed speak through the week. Brainerd and Williams speaking on Tuesday. Fed minutes on Wednesday. Look out for details of balance sheet reduction. Chairman Powell told us to, so we will do just that on Wednesday. Plus, oil executives heading to Capitol Hill to testify on gas prices at a House hearing. That is must-watch TV. We round out the week with another round of initial jobless claims on Thursday. From New York City, for our audience worldwide, thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the number fever campaign. Del Fierro thought Pepsi's number fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
South of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Weinergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there, like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities in the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write-up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just attacked that video and were like, you explain things so much better than my boyfriend or my professor, or I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly, this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwit, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that They're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind. But it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about
0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. While that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African-American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest blight in India is the system of caste. For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor.
My friend also
Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation, a language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
Refer to the dictionary also, okay, and find out the new meanings. As well as describe about. Hey, Richita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW, and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, She came to the Gaulido campus and then she toiled very hard for 1 year despite many problems. And today I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. At Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We got a lot of extracurricular activities and most of them got institutionalized now. So for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, the traditional Indian sport. We have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change on that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
They're stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park. And inside this greenhouse is a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design solutions that reduce our need for so much cool air in the first place.
One thing many cities have in common, and that's the importance of vegetation. That's a very important measure to mitigate the urban heat, because of the shading effect, of course, and the psychological effects of the vegetation, and also because of the possible evaporative cooling effect of the vegetation. Vegetation can be, of course, on the ground floor in form of trees and shrubs, and you can walk under them. This is the so-called canopy layer that the vegetation forms above us. But vegetation can also go up the facades of buildings, and it can go to the roof of the buildings.
Luckily, Singapore has been striving for the garden city feel for quite some time. It was a vision initially introduced by then Prime Minister Lee Kuan Yew in 1967 to make life more pleasant for people. And today, Singapore is one of the world's greenest cities in terms of urban vegetation. Kampung Admiralty, a community centre that contains health facilities and social spaces, now provides more green space than the plot of land it was originally built on. It's topped by a roofscape of staggered terraces covered in local plants, which functions as a community park. And a village green in the centre that contains farm plots for residents to tend to. Park Royal on Pickering was designed as a hotel in a garden that doubled the green growing potential of its site. There's now 15,000 metres of sky gardens, reflecting pools, waterfalls, planter terraces and green walls. And the government has big plans as well.
Singapore actually has a plan to plant 1 million trees and add more green spaces over the next 10 years. It is actually a mix of wanting to reduce the urban heat island effect, but on the other hand is also to get the people to be more connected to nature.
But it's not enough. The city-state has still been warming twice as quickly as the world average over the past 6 decades. That's why Cooling Singapore has developed a catalogue of other potential heat mitigation measures.
When you try to mitigate the urban heat island effect in a city or in any building, in a village as well, the first place to start is by shading of the windows. You have to keep areas clear so that the wind can move through it. Water of a certain depth can act as a very good thermal buffer. If you have to construct heavy buildings such as high-rises, at least you can make the surface, the facade, less heavy, and you can protect it from direct sun penetration. You have to make sure that no combustion engines will be in the city in the middle, in the medium to long-term range. So ideally, the electricity production is outside of the city, and you bring just the clean electricity into the city. You can at least minimize the use of energy in the city, and you can start to slowly convert the roofs, the facades of the city into production areas for renewable energy. In Singapore, unfortunately, this is a limited option, but in the long run, it could produce up to 20-25% of the energy, of the electricity needed in Singapore if all the roofs and the areas in the buildings, on the facades would be used to do that.
With so many different ideas, Cooling Singapore is also designing a virtual model of the city to test them out. It's called a Digital Urban Climate Twin, or DUCT, that will calculate how each element of the city's design will impact the urban heat island effect.
That means we model not only the geometry of the buildings digitally, but also we model the transportation, the insulation, the temperature, the radiation coming from the sun, the weather, the local climate, the even very, very microclimate of the city, the water, the movement of people in the city. We can invent scenarios, we can design scenarios, test them before we actually build them, and if they test very well and we are sure that they will function, then we can start to build them and put them into reality.
Singapore will be using this new tool to figure out which actions it should take next. And the model can be applied to any city, whether it needs to keep heat out or keep heat in, which will ultimately save energy, slow climate change, and improve our quality of life.
So this is something that Singapore will be able to export, maybe even together with its city development systems that it already has. Singapore is one of the very few cities in the world that really combine this scientific approach with a very well-established urban redesign and urban design approach. Through its agencies and the combination of its agencies, it has achieved a lot in the past. If it keeps following the scientific path and the combination with the other knowledge in the city already, we think that it will be a very comfortable and very livable city in the future, even more than today.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January, a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You got to make it a little more exciting. All right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while, and I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is live stream shopping, one of the hottest trends in China. Every night, tens of millions of people watch live shows hosted by influencers like Via and buy the products they recommend. On e-commerce and social apps like Taobao and Douyin, the sister app of TikTok.
我觉得已经改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了，你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G. And it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice: nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology. And live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。
不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高。但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of like losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from like Gucci sunglasses, lipsticks, homes, and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. The king will be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce, and he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情。可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
里面有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to, show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him that's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things because you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. and they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top-tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows. And we see like P&G have their own sales room, which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers. And it enables a lot of players to actually sell.
Live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaxi's numbers or Via's numbers, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. There will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Palamas Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusaari observed the strong back-and-forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate, and that rotation extends deep down below the surface, and the waves can be very long. They can be several hundred meters long. And as they come into the near shore, this rotational energy turns into an elliptical energy, and eventually backwards and forwards, as you probably noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. There's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters off Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors, and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming in to our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Inna Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1986, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Inna wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
solar and wind energy were fully commercialized, there were a lot of amazing technologies implemented everywhere, I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Inna co-founded EcoWave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties, and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station. This is the EcoWave Power conversion unit that has been operating in Jaffa Port since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here.